Welcome to the Crypto Kingdom. Welcome everybody to the Crypto Kingdom. We're going to go through some charts today. Hey, this is London. You guys having a good time? We busted down out of this triangulation, guys, out of this entirety of the chart. We busted down into negative territory. We prepared you for that, guys. We definitely prepared you for that. Let me turn the music down just a touch. Let's get into the technicals. I want to make sure that music is okay with everybody before we just rock it through the entirety of it. We're excited to be with you again today, guys. This is the hottest spot for all of your technical analysis. You guys know that we are doing a real good job. Make sure this music is okay. Give me a shout out in the chats. I look forward to covering the triangulations, guys. We're going to go over primary, secondary, and tertiary today. Primary, secondary, and tertiary. Okay, first, second, and third order. Okay, it's not going to be financial advice, but first, second, and third order of your pricing targets, where you're at, how are you scheduled in. I'm going to update you on how VIP are scheduling in, how are the big guys doing it. Okay, I want to let you guys know that today. So, yeah, just a nice time we've had here recently over the last few days. People being very prepared based upon what we have been delivering, guys, and we've been delivering the kind of the hottest, I'd say, in terms of technicals. Yeah, we have a few different options to look at today, a few different options. You guys, not many people are talking about the entirety of the possibility of this triangulation. Now, yesterday we nailed it, guys. We prepared, I think, everybody really well in terms of the potential move down. I'm going to talk about a few different options today in terms of the primary, secondary, and tertiary, in terms of the first, second, and third order of your pricing targets, and we're going to frame it that way because we believe it is probably the most accurate, most sophisticated way to frame your decision. So you guys let me know on the music if we're okay. And Peter, nice to see you, brother. Nice to see you. You say first. I like that. In terms of everything, let's go ahead. I want to cut this music, and I just want to stop it and get serious for a while, if that's okay with you guys. If you want the music, you let me know. Otherwise, we're going to get into this. The primary, okay, that's going to be the primary. The secondary is the second order. Tertiary, the third order. Okay, as we look at everyone has different opinions these days on exactly what to do. Not many people are talking about how to cover, okay, how to cover your position. We're going to talk about that today. I'm a former financial analyst at a very high level. You guys know we have a lot of, it seems like everyone here is at a good point in terms of, let me make sure that we're okay on the stream. Looks like we have lost stream just for a second. Hopefully that'll kick back in here just in a moment. There we go. But just to make sure, guys, we have a lot of financial professionals. We have a lot of blue collar to white collar. Everyone wants to know, like, what is, where is the, it looks like we're just having a little bit of stream detail. Maybe I'll shut down the music for a minute. We had that going a little bit bravely up front. Someone had requested that, so I'll go ahead and just knock that off for a second. But as we look at things, guys, this descending triangle is not going to show itself very apparently unless we do a few things. I want to go into the set. Let's go into the settings. Let's go into the background. I don't want to necessarily do this all the time. I want to just scale out for a second to make this a little bit clearer on the background. As you guys look at, let's go into the settings, and you guys can always adjust your background settings, etc., into something that'll show a little bit more clearly. Let's light this up for a moment. Let's take a look at the charts a little bit differently today. Let's brighten things up, and let's take a real good look at the candle action. I want to do this, and we can adjust the colors a little bit more. But in terms of this, what I want to do is scale into some of these, I don't know, some things we may not pick up on otherwise. We may even brighten this up a little bit more in terms of what if we just go straight white. It's not a very popular look at all, but you guys are going to get a real clear indication of these candlesticks, okay? Particularly this original red candlestick. I want you guys to notice the bottom of this candlestick here. Guys, that is a big candlestick. That could essentially form a base here, and I want to talk about this base structure as we contemplate this triangulation. Now, it looks, it's not as wild and dark and vivid in terms of the overall look of the chart, but I want to make sure you guys pick up on that base number, that it was right at that 30,000, because that's the key focal that we're just breaking through now. You guys know with the last few streams, you've been very prepared in terms of this move to the downside. I'm not worried about that. You guys are very prepared for that. What I am worried about is definitely counting this line sideways, and I'm going to turn the color of this to, and we're just going to play with this for a while so you guys get a clear indication of what's going on. Now, as we look at this, guys, if we were to just line that out as clear as we could, okay, in terms of a line here, we may just turn the line red, okay? We're going to get out the fine-tooth comb. We're going to get out the scalpel today to make sure that you guys are fully prepared. Let's make this if we want to make it kind of a red line, let's make that a red line, something dark that you guys can definitely see. This looks best on a big screen TV. You guys know that. What we're looking at right now is a breakthrough. If by chance this original line could serve as any type of a base, and we're going to go through primary, secondary, and tertiary. Your targets, okay? Your opinions, your framework, how you're approaching the market. I want it to be based on a 1, 2, 3 kind of scale, just for a moment to strategically approach how you're looking at things, because everyone wants the quote unquote right answer, right? Yeah, you want the right answer. The big question is, okay, well, if you don't have the right answer, let's say you even have an 80% probability of having the right answer. Okay, what's the other 20%? Or what if it's another, let's say you have the other 15% and then the other 5%. Let's compromise the position slightly to the variability of the market, allow it to function properly. And let's go over that primary, let's say the highest probability, then the secondary, then the tertiary, the 1, 2, 3 punch that you guys need to knock this out of the market. So that's what we're going to cover today, is that overall strategy that I don't hear people necessarily discussing within that framework, within that I'd say that that strategic approach, guys, and I hear VIPs use it from the subscribers to the members. I'm hearing that all the time, so that's very, very, very nice. In terms of Luis Gonzalez, how can you join the VIP group? You need to you and Peter both need to click on a desktop. Go to a desktop. Go to any desktop. It's not going to work as well per terms of service on your cell phone. For some reason, they don't like cell phones. I don't know why. YouTube isn't a big fan of those. So go to a desktop. You'll be able to join, and we appreciate your interest. We know that you have recognized that the VIP are doing very well, and they are doing extremely well. I'm gonna spend some time today, and you guys, this may be a good lesson on how you can all adjust your pricing, your charts, etc. If you want to adjust things, we're we're extremely let me say we're excited about your interest, first of all, Peter and Dolores. We're very excited about that. You guys can definitely plug in anytime you'd like, and we invite you to do that. What we're looking at right now is the idea of a downward, guys, it's going to be a descending triangle. I don't want to get real fancy with the technological terms yet, but we have a few different indications on the technical descending triangle. I want to go through kind of an option 1, option 2, and option 3, and we're going to get into the different levels today. I've done a lot of analytics, as have the VIP. Last night we had a conference call amidst them. We had a Spaces call this morning as well on Twitter, and it's an important. We're at an important time. We have broken down through a few different levels of support, and that's what I'm definitely hearing that from the VIP, is that there has been a very strong breakdown in terms of, guys, you all know that in the market it has gone down. We kind of prepared you. I'd say we prepared you very well for that in terms of the preceding the preceding triangulation discussion we had up front. It included this double bottom here. You guys know that. And then absolutely. The streams yesterday, what did we go through? We went through the fact that we had, to the extent that we had some degree of a triangulation here. We'll go to a different time frame. Let's go to, if you want to go to the daily, let's go to the, what do we go to the weekly? We can go to the weekly real quickly, and we have adjusted the charts quite a bit, and that's okay. Today I want to cover all different possible angles today. I want you to understand that you can, this technology, you need to be able to handle it. Your trading view, right? We also have gate. I just want to make sure that today things are very clear on the screen in terms of what you're looking at. Even if it doesn't look popular to you, if it doesn't look real nice, I want to go through the different ways that you're able to also use your technology to also set alerts, to set alarms. For instance, if you had this designated, and we'll just go through this designation of this. If it was a bottom line support, the crucial element here is that it's currently being broken down through, and we had anticipated that, and it's not a surprise to us. Our group was 100%. If you guys watched the streams, you absolutely knew where things were going, and you understand this concept of confirmation down out of a channel. You're understanding, a lot of things that again, guys, we are just plugged into things like the New York Institute of Finance. That's what we want to. We have former, you understand that, guys, former JP Morgan, former BlackRock, we just, and it's blue collar to white collar. Some of the strongest people in the group are definitely they're day traders. That's it. They want to trade. They don't get diamond hand awards. As we look at the entirety of this, none of us in the group, guys, none of us are getting any kind of diamond hand awards for holding through this pattern, guys. It's just, towards the top, we were the group that called this. You guys know that. It was very clearly expressed, Bitcoin at the top, with this inability to maintain the slope of the growth, right? And I was teaching people literally during that time that BAM was the next movement, right? It was the next movement down was straight down, and that's what we were going to be expecting on the charts. And sure enough, guys, we have alpha traders. We call them alpha traders that literally saw this coming. We're instructional. I had a nice conversation, a Spaces chat with somebody this morning. and he is a member of VIP, and he was talking about, London, I remember when you were talking up towards the top of Bitcoin, literally up towards the top, guys, of Bitcoin potentially reaching a figure of 13,000. And I thought 13,000, yeah, absolutely. And there we go. We have Loris Cruz has powered in. Loris, how exciting. We are so excited to have you as a VIP member. You are going to love it. Let me go ahead and invite you real quickly, you specifically, to go to our Twitter, and there should be a description link. But you guys, all of you, whoever's listening, make sure you go to Twitter and do in the search box, type in The Kingdom, TheKingdom. Okay, type in The Kingdom. I'm going to go ahead and put that link in the field right now of the chat, so that you can. Why don't you just go to Twitter and type in The Kingdom? I think you'll be able to find it. You'll need to scroll down to the bottom and make sure you follow this instruction. Scroll down to the bottom where it says "Go to the Kingdom." Okay, go to the Kingdom, not any of the profiles. Scroll down to the bottom, go to the Kingdom, and it'll be written out for you. Okay, like I just did here. What you'll type in is The Kingdom. All of you guys, you need to follow us. We're killing it. We killed on AMC. Boom. Like we're doing a good job. Not financial advice. AMC is security. You guys know that. Right down here where it says "Go to the Kingdom," click on that and go ahead and reply to the first pinned tweet here. This first pinned tweet, and make sure you follow, turn on notifications too, because we're constantly having conference calls in the back. And the best thing I can do is facilitate the talent that's in the room. Absolutely, the talent that is in the room continually. It is what it's all about. And you guys know the back rooms. It's where all the action's at, guys. We have the Doge trade room. We have general chat room. We have Bitcoin trade room, which is doing great, guys. The Bitcoin trade room is definitely doing really well, and that's what we look at bringing to the team continually is enhancing the entirety of that dynamic. So that's what we're focused on doing. You guys, let me know in terms of let's see, Loris, we'd like to know where you are from. We'd like to know kind of what your background is, and essentially how things are being put together in terms of your trade. What would you say? Your trade history, et cetera. What you're interested in. What are the major dynamics that you're focused on? That's real important for us to understand your background, your trade history. What do you bring to the group? You're probably a professional. I would imagine you're a professional, and that's real exciting that we have you as a new member. Everyone, let's definitely welcome Loris to the VIP, and she may have. We'll see how this comes to fruition here. It looks like I'm waiting for. Looks like an interval wait in terms of the structuring. There we go. We're back on. A little bit of a pause, hiccup here and there. I've messed around with the settings quite a bit. Not sure that's going to interrupt us. I hope it doesn't. Loris, head over to Twitter if you can, and make sure you're plugged in. I'll make sure you're plugged in tonight. That you're plugged in like immediately to Twitter and the VIP. We appreciate you joining up. That's phenomenal. So as we call, we did call the top of this. You guys know the what's the big? There is no mystery, guys, in terms of the top of Bitcoin. Like literally, there's just no mystery. Like the book opens right up to it, page 321. Copy that, guys. Page 321, and our book shows the top. Excuse me, the top of Bitcoin. Bam, right there. That is. There's nothing, guys. There's no mystery in it, guys. It's not a new phenomenon. It's been studied for years, guys. The type of technical analysis that we use, it's been studied for years, guys. It's been studied and applied to pricing over the hundreds of years, over the centuries. It's been applied to the pricing dynamics in variable markets over hundreds of years. So, Loris, we are so excited to have you. Very, very excited to have you. And looks like we may be, I don't know if we're experiencing any kind of like technical glitches. You guys let me know. It may just be my system on the side that is a little bit freezy. If so, I may need to restart with just a few less dynamics. I may do that if we're continually having any kind of an issue. I'll start up on my side stream here and see if I can test it on a different platform. We are running a lot of juice through a lot of limited wires. I'm not sure that the city of New York could probably give us enough bandwidth to do what we're trying to do, but we still enjoy trying to do it, right? So definitely shout out to all the new members, to everyone who is doing well at Bitcoin. We enjoy Bitcoin traders, day traders. We want the guys who cut out at the top and who are getting in below, or who are looking for the right prices right now. That's the kind of crowd that we want. So, Loris, we know that you fit right into that crowd. We're very, very excited to have you here, and let's see what we have in terms of, let me just go ahead and look at this. problem playing back, etc. It looks like there may be a little bit of a feed issue. If so, I may need to restart just my own machine. It may just be on my machine or your machine. You guys let me know in terms of a copy check. Let's see, copy check. Let's see, check on that. You guys let me know in the chat whether or not you're experiencing any technical difficulties. If you are, we will throw everything back online with a little bit simpler of an approach. I did go to this extreme just to show you guys on the candles. If you are plugged in, it's difficult to watch anything else. I wanted to let you know this red candle right here. If you can focus, these red candles, bam, take note of these guys, because if that is a level that's going to be respected or not, you guys know that's the key level, and this triangulation is huge. You guys know that the triangulation here is absolutely huge. So it looks like I may need to restart the stream. I'll probably do that, although I don't know if it's on one device or two devices or what we're exactly plugged into. But I will review that, and it just looks like it may just be my system. So you guys copy up with something. Let me know. Is the stream okay? It's good. Okay, good. Copy that if it's good. If it is good, because I'm making sure I don't have it. Let me say, good stream. I appreciate that, Carlos. And it may just be my other devices. I have too many. Not too many. You can never have too many devices, right? I just have, literally, guys, I have so many. Whoops. Well, here we go. That's too many. Obviously, I have 1, 2, 3, 4. I mean, I just multiple devices. Most of them with different dynamics, different alerts on them. We have over 200, 300 coins that we're constantly reviewing, and we're on that all the time. So I just want to make sure that you guys are also, we have the latest up-to-date equipment. What we have been told is the top of the line equipment, period, on the market. So that's the new system that you're looking at now, and it's being run on that. So to the extent that's not working, I mean, I can go shell out another multi-grand purchase here if that's necessary, and I'll do it for you guys. You guys know that, but we want to make sure it's kind of the older equipment that may not be just operating perfectly. So in terms of this triangulation, do make sure, guys, if indeed this level here, we're going to talk about primary, secondary, and tertiary. Okay, the first, second, and third order of your strategy in terms of what is your backup plan. Do you have a plan B? Well, okay, we have first level kind of strategy to conquer the market. We have a second level potential strategy to conquer the market. Let's say, okay, that we have a third level strategy to conquer the market, right? So everyone wants to know, is it time? Anyone I talk to, they're asking all the time, like, how low is Bitcoin going? Well, we have clearly, and this is nice that we line this out just in white here, just because it's very clear to see. We have all our pricing targets. Absolutely, we handle Fibonacci's like day in, day out. That's our bread and butter. That's the VIP way to be, right? Are those pricing targets? We'll do it on the macro, on the big level here. We'll also do it on the micro. Okay. Now, what is it? What is a Fibonacci? You guys, if you don't know, it's under the pitchfork, guys. Under the pitchfork on TradingView, you're going to select that. You're going to go to fib retracement, very easy. Then click somewhere and drag it up, guys. It's real easy. Okay, now you want to drag from the low to the high. Very easy. Just drag from the low to the high. And it's going to give you pricing targets. Okay, those are operational, essentially, calculations that are facilitated by TradingView. You guys know that, and by most of the exchange programs, whether or not you're on Binance, whether or not you're on Gate. Gate is the key primary the primary tool that we're using these days. So I'm just going to let you know that is the key focal point for us, and we're going to continue to use Gate. We just really do enjoy it. We just love it. So in terms of where you guys are at today, I guess the big question that I want to hear from you guys is what is your what are the key questions you have? You guys want to light up in the stream or light up in the chat? Let me know what your key questions are, and we'll deal with those today as we talk about the first level of order in terms of the first level strategy, the second level strategy, for the primary, secondary, and tertiary goals that we have for Bitcoin. What is your first? You say, well, it missed my pricing target. We have a big saying in VIP. It's like, well, the problem is what? The problem is the market maker didn't pick me up, or I didn't get picked up on my orders. I say I didn't get picked up on my orders. We'll talk about market maker versus taker today. We'll discuss that as well. But as you talk about, and as you bring to the idea here, is like, is there a solution? If you bring a problem as an idea, what's the solution? That's what we're very focused on. So a lot of people say, well, I didn't get picked up. The market didn't pick me up. Say, well, what's the solution? Well, I got in anyway. Okay, so we're very big. We're very big into that level of just understanding that if there's a problem, there's going to be a solution too. So we're very excited to have you guys, to have all of you involved with the crypto kingdom, guys. You're knocking it out of the park. VIPs are doing very well. I'm going to open up a secondary resource here so that I can focus on yet another platform. We're going to boot up another platform so that I can operate on probably 5 platforms for you guys right now, and that's going to be important as we get into the diagnostics today, because we're going to do kind of a deep dive. The magnitude of this descending triangle is enormous. Okay, now whether or not it would be a huge fallout move like what we experienced here, this was a rising wedge up at the top. You guys know that the magnitude of that move was about a 50% move, about a 47% move within 6 days. That was a crucial move in terms of profit taking. A lot of people say, well, it went down. A lot of people took profits, guys. So as we look at who's in the money right now, we do have individuals. Shout out to Angel. Big shout out to Angel Matos, who, guys, Angel has been around. He's the top level supporter. We want to shout out to him, and we do all the time. We love Angel. We love all you guys. And Angel, you're the quintessential VIP supporter. We just appreciate you so much, and we couldn't be who we are without you being who you are. And we love all you guys like that. You guys know, you understand that. But Angel's been around since like $7 in Bitcoin. So $7.50, I think, was the exact nature of his entry into the market in Bitcoin, $7.50. We have some big hitters like that, and that's not something that you're going to find just anywhere. And we appreciate the privilege and the trust that is involved in Angel and you and all of you, whether or not you're subscribers or you top level supporters. You kind of I know Andrew yesterday chimed in with some support, and it was really crucial in terms of, like, as we looked at things. Andrew stated, we were talking about different. What would you like next to your name? And Andrew said, I think what he said was, what was it, lead support analyst? And I was like, that is just perfect. And it didn't surprise me that he said that, because he's that level of a professional in terms of lead support analyst. So yeah, at the Crypto Kingdom, we have Andrew just powering through. What's up, Andrew? You are the boss. You know that, right? You're the boss man. As we look at this pattern formation, guys, you guys know, everybody knows the page number now is page 321. It's like a countdown, isn't it? It's funny how that works in John J. Murphy's book. Yeah, and I decided to play, to adjust these colors a little bit. Let's do something a little different today. Let's just do something a little different. Let's make sure everyone is clearly plugged in, because not all of you have this up on a big screen. So in terms of this pattern formation at the top, yeah, it was, guys, if it's in a page in a book, I can't take that much credit. I called the top, but at least I gave some reference material for it during the top that this was occurring in Bitcoin. People want to know, where's it going now? Well, I'm starting off. Well, we talked about it up here, and shout out to Julian, who was on a conference call, VIP this morning, who was on a conference call, and he said, yeah, London, I remember when you were talking about, potentially, around this zone towards the top, talking about Bitcoin potentially going down to a figure like 13,000. And he says, I remember he remembered the reaction. Now, right now, it's still a very unpopular idea, but everyone would like to pick it up at 13,000. Absolutely. I would have liked to pick it up at 13,000. I was expressing that in around the top here. Absolutely. So as those ideas manifest into kind of a more concrete reality, we're excited about the fact that lower prices are being achieved, not just in Bitcoin, but in the overall alt market as well. That is what we're planning for. The VIPs, I'm going to say the VIPs are stacked with heavy reserve cash. It's a phenomenal plan that they have, guys. It's just, and I think it's very profitable. It's huge that we share this idea with other people, that this reserve cash, the idea of never being overexposed at a higher level, that's phenomenally important. Never being overexposed at a higher level. Let's go through some pricing targets. If we were to complete this, and we'll go through a primary, secondary, kind of a tertiary, I'd say, analytic here. If we were to count this entirety, now you'd have to go to the candlesticks. You'd have to get to the candles. But guys, on the candlesticks, you're going to be, beautifully, I'd say justified. I'd say in your deciding that yes, you would want to, and let's get out the polyline, that you would want to consider this, at least consider this as a descending triangle on kind of the macro move here. Because if we, and it doesn't look like much if you just go to the lines, but if, for instance, we were to go to a polyline, let's separate this out, and let's just drag this over to this area here, okay? And let's drag this to this area here. Let's go ahead and change this coloration so that you can really visualize this, and we'll just change this to a real dark color like this, so you can definitely see this on the screen. It's not my favorite, but we know some people people who are using this this kind of setup, and want to make sure that it doesn't look much different on your screen either. So that's a nice thing. So as we look at this, you start to say, well, that looks like a descending triangle. And it sure does. Now, we don't have a full expression up in this area. We do actually have, let me count this actually, because we really do. And I did. I want to make sure I'm accurate on this. Let me get back in here. Let me do this the proper way here. Let me see with this hit and the hit back up. That's my fault. I want to catch myself anytime I'm not accurate on the stream or otherwise. I want to catch myself. If you guys ever catch me, you guys know I'm the type I want to know. So I just caught a potential error there, and I want to make sure that we're technically accurate, that we're technically sound within this. And now I'm going to get out the razor's edge. You guys know that. Let's make sure that we get this right, because I wanted to tell the proper story of where we're at in the type of analytics that you guys can look at doing. Let's replace that now that we got a little bit more of the focal onto things. Let's look at that. Now this is a little bit of a different ballgame than what I just drew out, because we have this original rail in here, and we do have that top line expression in line with these original candles that were manifested, guys, and that's I don't know, that's something that we can look at in terms of that top line move down, etc. How does this either hook in from here as we get into the micro analytics? This would be kind of a hook in confirmation. As I really get into it, guys, this would be a hook in confirmation that we would that we would definitely want to look at. I would say that would be maybe a tertiary. Let's say that this would be a tertiary approach. This would be not the primary, but depending upon whether or not you're being aggressive or conservative, maybe you would want to make this either your primary or your secondary. If you're going for a bigger gain and more aggressive, and you're heavier, more heavily involved in the risk, maybe you would want to say, yes, now this is I'm going to go more conservative. Okay, this would represent more of a risk potential to my portfolio. Say I'm being more cautious. So let's say that I'm being more cautious. I want to be more risk averse. Okay, so this might be your primary device that you decide to, and why, guys? Why would this be a primary consideration if you were risk averse? Because this could represent a bigger move to the downside. Okay, it's a larger pattern. It's not one that we would necessarily hang our hat on and say, yes, absolutely, we're going to draw this down to the candle wicks. Yeah, absolutely. We wouldn't necessarily as a matter of due course on the regular, as a matter of standard operating procedure in the market, we wouldn't say I'm going to draw this down to the candle wicks. No, we might not say that, guys. No, in terms of that of the dynamic though, as we talk about the primary, secondary, or tertiary approach in your strategy approach, and Eloise, as you joined VIP today, Eloise Cruz, understand that this might be, depending upon your specific situation, you may be very aggressive in the market typically, but you may have seen the entirety of the retracement, and you may say, well, right now it's time for me to be more conservative. You may want to play this pattern, which is a larger pattern. And guys, as you look at this, we're talking about the entirety of the pattern on Bitcoin here. We've changed the price chart to blue on a white background because I want to make sure that you can see those candle wicks very clearly out there on your cell phone or on your big screen. This looks best on the big screen, guys. Just to let you know, in terms of this, so this would operate in terms of technical analysis, the standard measurement routine. And see, it looks very void and empty here, just on the line chart. That's why I'm talking about it. The fact that it's an option right now, because you see those candle wicks drop in, absolutely, and you start to see the full expression of this pattern, which is essentially recreated here. Is it perfect? No, but it's still indicated by this strong move, this measured move, which could be recreated. Okay, and as you look at the move, ultimately a move down from here, it may not be, and this is very important to realize, guys, it may not be that again, we would let's say it may not be that we would fall there on the line chart, but it may be a dramatic move that we could capture and deploy some cash on. Okay, on something that still wouldn't show up on the line chart, but it may be a measured move on a candle. Okay, you understand that? It may be something that we have a drastic price movement. It doesn't catch on the line chart. It doesn't stay there long enough to consolidate to give us that representation along the line chart, but it does make that same move. And I'm talking about this primary move down here, okay, which is on the candles. You guys know that it's on the wicks, guys. It's on the wicks on the sticks. Look at that. It's there. You see that here, and I changed the background to white so you can see that's clearly there. So in terms of a measured move, it can happen on the line chart. We can also prepare for it. We'll definitely prepare for it on the candlestick. So That's a huge, I'd say, a part of due course of the assessment of the different, what would you say, the different approaches that you'll have at primary, secondary, tertiary. And we've also kind of discussed herein that your approach, your primary, secondary, tertiary, your first, second, or third order of strategy that you'll bring to the Bitcoin or the crypto market, or even your stocks, etc. Now, this is not financial advice. We definitely don't, provide financial advice. But what you guys want to know is, depending upon whether or not you're going to be aggressive, depending upon whether or not you're going to be more conservative. This would be kind of a conservative approach to say, I'm going to back off. Tell you the truth, I've just decided I want to back off until, what would this level be? Let's make sure we have this measurement correct. But if we wanted to, and you guys can look in the back rooms, we have this delineated quite nicely. We have this laid out quite nicely. That's going to take you guys, this triangle here would take you down to the 786 precisely. Okay, so that 786 is a big level down, guys. That's 13,000. Okay, 13,000. What is that? 13,880 and 71. Okay, $880.71. Now, is that a guesstimate? No, that is the figure, guys, from the 64,863.10. Okay, that's $64,863.10. That is the all-time high as published to me. So these calculations, I'm going to tell you, they are accurate within a 0.01 cent differential here. Okay, so that you can count on that figure as being a correct, figure. This 78.6 is going to be the 13,880. Now, for people who are very conservatively involved in the market, they may want to park cash there. Period. That's it. That may be their primary. For other people who are more aggressive, they may decide that they want to go ahead and they want to turn that into maybe the secondary or tertiary, their second or third level of their strategy. Correct? They may say, no, I'm going to play it a little bit in the meantime. I think it'll catch up in between some different levels. What do we have in between there? I don't want to wait because it may move drastically down. It may not, but we're prepared for that move. Why? Because we have that level of a measured move up around the top here, guys. We have that measured move. Bam, we have that moving. We have a different level of a measured move from the top side. So we can get into even another level, another order of magnitude in terms of even being more conservative if you wanted to kind of, operate outside what I would say would be the probabilities right now. Okay, the probabilities, as we look at those again, if you have three options, one is, let's say, a 60, maybe 70%, probability of it occurring. Maybe the other one is like maybe a 15%. Maybe the other one's an outlier. It's only a 5%. We would try and, grade things within that order of probabilities to where it would manifest itself, hopefully in terms of an increased secured trade for you or an entry for you, right? And that's based upon what I hear from the VIPs. I think that's a very, very smart move, though, to have three different strategies at all point in time, because you're hearing all these different, and the opinions change every day. All right, they're changing every day, right? It's like this guy has this opinion, then this opinion, this opinion. So you need to consecrate yourself with the right group. And I'm glad you guys are here because the VIP Eloise Cruz just joining today. We had over 130 members, VIP members, join the first month, guys. So we have back rooms full of financial professionals, everything from blue collar to white collar. I tell you, okay, who want to beat the market, who have that level of trade experience, who understand, know a backup strategy. Absolutely. Now we're talking about primary, tertiary, to tertiary, right? 1, 2, 3, guys. Primary, secondary, tertiary. Pardon for that. But the primary, secondary, tertiary, etc. So that's the 1, 2, 3 punch. Okay, you may get, you may have to bob and weave a little bit, but you'll get your first punch. How'd it go? Well, I missed him just barely off the chin. Okay, second punch. Here we go. Jab. I missed that too. Third punch. Okay, well, we got, out of the three, we're going to have that 100% somewhere. We're going to have that backup methodology to where that third one's going to connect on an uppercut, and bam, he's on the ground, right? So that's what we want to maximize that knockout punch. If it's on the first, second, or third order of the strategy, that's what I'm seeing the VIP do right now. That's what I'm seeing them plugged in the back rooms. And I'm just telling you guys, they know what they're doing. So I know that you guys do as well. You're looking for that good technical analysis. I'm bringing you kind of option number one, which is this giant, guys, and it's indicated by the measured move, guys, on the wicks of the stick. I've turned this white so that you can see the movement on the candle wicks here on the bottom left-hand side, along with the volume there. But you can see the magnitude of that move, and it's just, that's a measured move. If we want to recreate that measured move within this express triangulation, and as things push, I understand that. As things push, I understand the dynamics, kind of the pricing dynamics as are laid out, what this represents, the complications of it. I understand it. If it moves there, I'm going to tell you, if it recreates this measured move expressed by this descending triangle, where does it park you? Exactly. Guys, almost exactly on the 78.6. Is anyone discussing that right now? I don't think anyone's discussing that 13,880, which is the precise calculation, guys. the precise calculation. It's not incorrect. Just because it's not financial advice does not mean it's incorrect, guys. If TradingView is going to, they're not going to. I don't think they're going to give us a bad figure there. So I think that we can rely on TradingView's calculations, which is what we're doing. So that measured move, guys, if it were to recreate itself, that's an option one. I'm going to bring that up. If you want to play aggressive or conservative, for you who are conservative, you might say, okay, that's fine. If it might go down there, I'm going to wait until it goes down there. Absolutely. People who even express that as maybe there's a 5% chance of it moving there quickly, I'm still going to give that a little bit of credibility in terms of my reserve position. I want my reserve cash to be at the lower levels like that. And I understand it's nice for us to find some confluence, some dovetailing or some overlapping between kind of a large express pattern like this on the left and an exact framework that could be moved down to, or exact established Fibonacci level that could be moved down to on that, that it's just a nice confluence, a nice overlapping, a nice kind of as they dovetail, as things, create kind of I don't want the word confluence is kind of a heavy word, but you understand that it's a double hit, right? It gives us an increased level of potential, let's say increased probability. I'd like to think at least we would discuss things in that nature, at least making the rank of 1, 2, and 3 of our strategy, the primary, the secondary, and the tertiary, the first, second, and third order of our strategy. At least we're going to talk about something like this. We would be remiss completely if we didn't talk about something like this. I mean, clearly, guys, we would be absolutely void of operational technical know-how if we did not talk about a descending triangle, which is formed a little bit, stagically, okay, a little bit, it did have this nice move down. It did, this was a push, this area in here, and I'm talking about this area up in here. But what did we have before we pushed, guys? Or if we take that push out, well, we potentially have, and you guys know the descending triangle is one of the most popular, guys. It's one of the most popular and one of the most bearish patterns you can run into in a retracement. And we do have a very strong line of support along the bottom. We do have this, the multiplicity that, if you guys want to, try and triangulate this out, we can find arguments for and against. It's just, if it continues to push out, I'm going to tell you this, we're going to have, if we continue to push out along a line of support, and this is the key indicator here, or the key feature is, it seems like we've broken down from that. Okay, so, we've discussed the triangulations in the back room, in the VIP, etc. I'll just say, if it were to catch back up, and barely, if it could catch, and we've kind of set a candle, it looks like below that, at least on the hourly. Let me see on the hourly, definitely. I think on the hourly, we have operated below that. Just look at this level and look how it's trying to just crawl back up above. You guys can see this level is just, it is just hanging right here. If you guys look on the lines, it is just hanging. Look at that. Oh, yeah. Huh? Wow. Huh? It is hanging underneath this line of kind of an express support previously. We'll tighten up the lines here to make sure that we're definitely on target. It's going to be a little bit more difficult to see that. But as you flip between the timing guidelines within the hourly, it's going to give us a little bit more of an expression that we can tighten up our lines. We don't redraw everything for every single time frame. We like to operate on the macro as much as possible. Why? Because right now on the macro, I want to just give you guys a look at the weekly. Just start there. And if your lines, I'll normally, the VIP will tell me, and I'll tell them, like, why don't you tighten your lines up? We'll do that quite frequently. On the weekly, this is a completely different chart than what anyone is discussing, guys. On the weekly, take a look at Bitcoin, because this is the week to week. We're very involved in the day-to-day. You guys know everybody is, right? We're very involved. We day trade. We want to know exactly what's happening in the next 10 minutes. Higher degree of accuracy, what's going to happen in the next 10 minutes than the next 10 days. But we plan for that 1, 2, 3 punch. We got to knock them out in one of those punches, right, in terms of the strategy. But in terms of looking at this, we have just entered into, we're in a downward trajectory right now, heading down towards, we'll say, hopefully that golden pocket, right? We don't want to blow through that golden pocket, because we blew through a level up top, guys. We literally, there was no apology from Bitcoin. It was like, we'll see you later. Look at this not just on the weekly here, but on a few different time frames. So as we talk about, if you want to, talk about a potential measured move, let's just talk about it, guys. Let's talk about this measured move. Let's talk, as we talk about the first, second, and third order of our strategy. Let's talk about this measured move. Now, why would I bring that up today? Well, we talked about one yesterday, didn't we? We sure did. It was pretty clear, like we talked about this measured move. I mean, this was a relatively well recreated measured move from this area. Now, you would want to probably measure this from the level of the breakout. Let's say from the level of the breakout to give this the justification. So you have to have some understanding of the, I'd say, the lower time frames and be able to remember that this was a very nice bull flag, right? It was on the lower time frames a very nice bull flag. So in terms of the recreation of this move, and we'll apply it to this move. But in terms of the recreation of this move, okay, they say flags flat half mast. You guys understand that. The recreation of this, that's a nice measured move, okay? That's just a recreation, okay, essentially, and you guys will understand that. We've done a lot of analytics on the nature of the bull flag. I won't go through. We can if you need to. Let's go to the 4 hour. Does the 4 hour show it to us well? Let's just dig into it. And let's see. Okay, there we go. We're getting into it. Different time frames are going to show you a little bit of a different story as we get through. But just to tighten that up a little bit so you understand the bull flag, the nature of it, etc. It will dip down into here the further we go down into the hourly, 30-minute, etc. So give us just a touch of understanding that we've covered these issues in depths and hours and days, guys. So we've been around for a while in terms of the financial realm. You guys know that you're financial professionals. Andrew is in the house. Andrew, it's nice to see you. Sorry I didn't notice right up front, but great to see you, brother. Great to see you. Andrew is he is our lead support analyst. Yeah, he is. And guys, if you want a good trader to be around, Andrew is the man who wrote the book. I'm just going to tell you that he's the man who wrote the book in terms of technical analysis. So excited to see you here, Andrew. $1,000 level of supporter. Also for all of you guys. You understand that support goes to you. It goes to it just goes to the community. It lets us know he's doing well. I mean, he's rocking the house, guys. If you knew his backdoor trades, what he's working on, you would be like, no way. I mean, it would literally you would have maybe people at the table like drop their fork or it'd be like, well, excuse me. Andrew is that good, guys. He's our lead support analyst. Hats off to you, Andrew. Or big salute, brother. What's going on? So nice to see you. So when we talk about a measured move, let's understand this, guys. From the weekly, let's just take a step back. We're talking about a measured move potentially down. Let's talk about whether or not it would be a measured move like this, because we haven't discussed this. I don't think anyone has, but it's so clearly indicated we would be remiss if we didn't. And Andrew, flags fly at half mast. That's the terminology that Wall Street's going to use, guys. It's in the technicals. So in terms of this, guys, this move to the upside and bam. Look at that, perfectly measured out from the top level of this channel. Flags did fly at half mast. That was a lot of fun. People made a lot of money. Yep, you guys we all made some money on that, huh? It was nice. Now, in terms of the move down, let's discuss this in terms of a potential measured move to the downside. Okay, now we've been talking about what we've been talking about. I'm going to get back to a structure that we can immediately appreciate. Okay, this measured move down from where? From this triangulation. You see that? Yes, now it's all clearly back in focus. You see that it's clearly back in focus where you can say, okay, wait, this is a descending triangle on the daily chart expressed by the candles and the wicks. Yes, so if we're looking at a measured move down from here, we're gonna land right at the 786. That's maybe one of our strategic options right now. Okay, copy that. You guys got that? You see how that's working? Yeah. Okay, this is TA, right? We're on this, okay? And Andrew can appreciate the level of a measured move down, essentially the expressed amplitude of the channel of the descending triangle. Move down, if you break down out of that and move the entirety of that, if it's respected, guys, then you're going to land at your 786 at that 13,880. That's a precise figure, guys. That's a precise calculation that would require you blowing through not only the 50, which you're arguably trying to hold on to. I think we've compromised the 50% level of retracement. I believe we have, guys. If you've just shown up in the stream, haven't been here the whole time, hit the like button so I can definitely know to cover the information for the beginning. Now, this measured move down to the 786 would be interesting. I'm going to say it would be interesting, but as we look at the entirety of, I'd say, and if I can, we'll scroll back to there. We'll bring another variable. This is the other variable. If we talk about the say one option, one strategy is measuring up on the candlesticks. Okay, we just covered a larger time frame. We'll count that maybe. We'll count that maybe as another option. But what we'll do now is let's go back to a different option now. Now we've covered this on the right would be the kind of the macro. Okay, now we don't have that on the line chart. Okay, a lot of people like to use the daily. Absolutely, daily is very well respected. So let's cut this. Let's cut this for a minute. Let's cut the big huge kind of animal move to the downside, like the bear is in charge and takes over the entirety of the market, right? Let's get a little bit more. Let's get into like a secondary and whether or not you want the aggressive move to the downside to be your primary, your secondary, or your tertiary, your first, second, or third order strategy. Let's I think it's very important to discuss these options. In terms of how are you handling your crypto trades, right? How are you handling your I just speak to the VIPs because how are you handling your what would you say, guys? How would you handle your portfolios, your crypto portfolios? And as I can discuss that, we discuss a lot in the back, so I'll try and feed off of what you guys have done and your strategy and rationale. Few different options we have. Few different options that we have in terms of, there's just, have we pushed, have we not pushed? Which time frame are we on or not? If we're going to get into, and this might be some good news, this might be a more conservative move. I'm going to say a more conservative move with another positional, I'd say, level of support on the interim between the 50% retracement and the 61.8 or to the 65th percentile. Okay, an interim level of support could be identified clearly. You guys know as the trend line along the bottom, and we've been talking about I believe there are two of them built in here, but we'll just talk about, we'll go kind of, high line in terms of, just for simplicity's sake, we'll return to the original idea which we had come up with, which would be an expanding wedge, the expanding wedge to the downside. Now, they're bearish, guys. They're feeding in from the top. It's a continuation pattern. Okay, it's a continuation pattern. We're going to expect it to feed to the downside. I think there's a good argument that we've already broke through one expanding wedge, and we're on kind of the second level of the next order of magnitude. But we'll stick with just this one expanding wedge to the downside. Now, I say it would be a little bit more. You could be a little bit more aggressive. Why? Because that would give us kind of an entry spot right around here. That would be something we would want to, and let me hit this this control line here. Let me make sure that we can definitely see that. That would give us a control measure line in line with the bottom of this trend line. People who trade, aggressively throughout the day, you're going to get into essentially the entirety of this move here. The base here as being the support line, being a trade opportunity, guys. I would just say that's clearly expressed through the multiple. And let me get to this. I don't want to forget this. There is an interior line here. Do not miss this line because you could completely not get picked up, guys, on your orders. You could completely get missed on your orders. I want to bring up this interior line here that is very clearly expressed. And normally when I have an interior line like this, I will give it a little bit less of a designation. I'll make it a little bit lighter, etc. But I want you guys to understand within the entirety there is kind of a shadow effect. I call it like a two-tier or a shadow effect that we would get into. This lower line of support here. This interior line right here. You guys see this interior line expressed by multiple hits. First of all, let's go for the lower support line. Absolutely, we have that lower support line. Then we have this interior line right here. One hit, two hit, and notice here. Notice here the level of this the angular nature of this. Notice that angular nature right here, expressing that it is almost part of exactly or precisely another interior line. That it's giving us an indication. There's a line here. There's a line to be recognized here. In line with this as well. So this is on the daily. So it would be very indicative that there's this interior line and an exterior line of support in the market. So people, as you would look at things, this would have its own primary and secondary, I'd say, level of operation in terms of how you would deploy your orders. I think it's a big deal as you would look at that. Just think about that, guys. It makes a lot of sense, right? It's like you have a backup plan. Yeah, we have a backup plan. So that's nice. I like that, guys. And it's the more precise you are in laying this out along your orders along the downside. I think you guys like this. Yeah, it's because you're going to have your essentially when I talk about your primary, your secondary, and your tertiary, this would be something that I think might connect with you guys a little bit more immediately, right? This would be something that along this 60+ day series of retracement that you would say, okay, now we have this interior line which seems to be respected, so you may want to hit into that. And guys, you'll do this on the micro, you'll do this on on the 5 minute, you'll deploy this type of strategy. Okay, at all times. Is there an internal line and let's say an interior and a subsurface kind of or an exterior line? Absolutely. So you'll get that effect. In terms of the need to, you'll get the not the effect, but you'll understand the need to have that backup plan if you are on this interior line or you're on a different time frame. This is where things get a little bit complicated, but you just have to do the analytical work behind it, guys. That's what VIP is good at, guys. It's what what we're kind of known for, is doing all the cross time frame analytics. I'm talking about, like, there's 21 time frames. We're going to hit them, guys. We're going to hit them. We're going to know where are the probabilities, where are we going to schedule in. Like Andrew, for instance, I know he's going to definitely. Dandro's in the house. Dandro's great with. Nice to see you. He's definitely, these are guys that are just into the technicals. They're gonna, they live, eat, and breathe them sometimes, guys. And so we're going to see that, yeah, there's probably a pickup zone here along this internal line, if I can do that very smoothly. Then along this external line, there's probably another pickup zone. That's if you want to sit back, relax a little bit, and just kind of wait for that line to develop, right? If you want to be more aggressive, and this is kind of even a primary, secondary strategy in and of itself, there's a lot of different options. You guys look at this, you're going to bifurcate and develop into the type of trader you want to be at all times, guys. And that's what's exciting about the market, is you get to be who you want to be. There are probabilities to function with, right? There are probabilities to get into as you develop as a trader. The nuances, the risks you're able to take with a increased level of probability that you're able to say, I'm going to hammer at this a little harder because, hey, I just booked 5 or 10 positive trades. I know I can do this, right? So as you start doing this, you understand the concept involved with a kind of let's say just a primary, and maybe this is your secondary. Maybe you guys are aggressive enough right now. This is your primary. This is your secondary. Maybe you don't want to worry about right now. You don't want to worry about the. Oops, here we go. You want to worry about the candles? Do you want to worry about what we decided in the beginning? Well, that's a little bit fast. It's kind of intraday. That's, all that happens in one day. I'd rather something consolidate along a line chart. I don't have to watch it. Maybe you're not able to watch the market every 5-10 minutes, something like that. You're instead of counting these these interdifferential, I'd say, or we could probably say interperiodic, interperiodic in terms of the time frames, from the base of the candles to the lines, okay, to the if you see the difference there from the wicks to the sticks, guys, it's a big difference, and to the lines it's a much different interpretation that we're able to present and understand. Okay, in terms of if we draw this line straight across and there's any kind of an indicated line of support there, or any kind of a pattern that would want to be recognized there, we're in kind of a new danger zone, except for the fact that it looks like, and we did actually establish this, and we get into a confluence of different we are going to need some sort of real lead support analyst on this. How you doing, Andrew? He's like, hey, that's why I'm here. That's why Andrew is around. And Andrew, we're happy to have you. You understand the level of sophistication that this brings, because right here along this original hit here, we have another hit, and along here we have another hit on a green stick here on the way up. But guys, this was another hit to the downside here. So we're literally going to have a multiple, the idea this would be a straight line, issue here. We might back off of that and say, well, you know what? I think that most people who are going to deal with the candlesticks are probably going to want to deal with this expression here, to the downside. And this green one is difficult to see. I can change this a little bit and make it a darker green. I think that might help. Let me go to the wick, make it a little bit darker green, and see if that helps you guys at all in the entirety of this. Let me see if that helps. It does. Excuse me. It helps you guys a little bit in terms of that red line and now the green line. You see that? Yeah. Okay. So what we're also going to discuss here is, is there a variability? Does it seem random? It's not random if we get into the Fibonacci extensions, guys. The Fibonacci extensions are a whole nother ball game. We'll get into them. But in terms of you wanting the right answer, it's a lot of work, guys. So the VIPs in the back room, I think we have the best group in terms of the assembly of the information and the distribution of it. It's not necessarily here. Here is a good time for us to talk about the different the different possibilities that we need to really go to work on and really hit, and the levels of understanding that the newer guys who heard us talking about. And Julian, I just love the fact, Julian reminded me today in a conference call this morning, he's a VIP. He's like, I remember when you were talking about 13,000 and it was high. And I'm like, yeah, absolutely. We were also, I was giving lessons at that time about it being the top of Bitcoin. So that's this group, and it's not popular. One thing I'm just excited about, guys, we're getting to a lot of lower prices on a lot of the different altcoins, etc. And we're getting to lower prices on Bitcoin, where it's generating some interest from the broader markets, from the broader market participants. I love to see that. So, I'm getting a lot of questions like, London, what do you think? Do you think it's going to go lower? Do what would be a good area to buy in? And I'm not going to give financial advice to anybody, but I'm hearing that from a lot of people. They don't want to miss out on the return of Bitcoin, on the rise of Bitcoin, right? On the next Bitcoin spike. Nobody wants to miss out, right? Especially us, guys. A lot of people in the group have been around for multiple Bitcoin spikes, and it's been nice, and we'll continue to trade and get through the accumulation phase. And as people talk about the Wyckoff method, et cetera, guys, we'll just talk about accumulation. Yeah, as the lower the price goes, what we care about is the lower the price goes. Like, what happens? Well, it went down. What'd you do? I bought. Well, then it really went down. What'd you do? Well, then I really bought. If it goes down, people buy, right? If it goes down more, what do you do? Well, you buy more, right? It's kind of an easy, particularly with anything that has a cyclical nature to it. If you're designing a profit model, just if you're designing one, you yourself, not me, guys, if you're designing one, I would imagine that you guys would want to buy more and accumulate more volume at the lower levels, right? Just in here, this area. I mean, this is where this is kind of the sweet spot of that pricing cycle, and we've seen that, guys. It's the pricing cycle has been. Let's go ahead and see if we can flow over to a different. Let's see. I have 1, 2, or 3 of these different Bitcoin charts kind of set up just to discuss different things. We can talk about the sweet spot of the pricing cycle, guys. You can talk about the previous years and kind of what it's presented to everyone in terms of the opportunity to profit. It's, where's your sweet spot? Well, the sweet spot seems to be down in kind of this area, at least for now. Now, there could be a deviation from the norm of retracement. I just tell you, there's some indicated levels like that 200. We have a good crowd in here right now. That 200 weekly EMA. Oh yeah. We love that, huh? That 200 weekly EMA has been gold. That is where a VIP. That's probably right where VIP money is just stacked. If you want a primary, secondary, or tertiary, yeah, that 200 week EMA is golden, right? That blue line that's just running up here. And I chose to have white charts today, just so today we could go ahead and look and make sure we visualize all of these indications, right? All of these indicators here. 200 weekly EMA. Look at that, guys. You hit it in 2018. Bam. Look at that. Perfect line of support. That was the line of support. People want to know, well, what's the bottom? Well, what is it, guys? Well, it's that. What got hit? What finally fixed the market? Think about this. Everyone wants to know. Who knows? Who actually knows of any of the channels, of any of the groups, anything else? Who knows what hit, what solved the market in 2018 and 19? We know. That's our group, guys. Who knew what was the top this time? We knew. Right, we were teaching people. So this is the group dynamic. We want to welcome Cruz in the house, new VIP today. You guys want to join? Just go ahead and join up. It's an exciting group, and we go through a lot of streams. There's a lot going on in the back rooms. A lot going on in the back chats throughout the day. We wake up in the morning, it's like, hey, VIP, what's going on? And we get into the charts, get into different things, different technicals, I'll say. We do have fun too. Chats are nice. Now we breached through this a little bit, but I say it's still a strong indicator. It's a hugely strong indicator for this 2020, this March. Power drive down, guys, below what we thought it would go at that point in time. Huge surprise in the market to a lot of the markets in March 2020. What hit again? Well, it dove through a little bit, but it did. It hit around what was the level of variability? Let's just talk about this. How much was it off from that 200? About 10-12%. If you on the line chart, we can go through the additional diagnostics, but you're probably going to have a little bit of a stomach in the market. Like, it didn't stay exactly, but definitely on that first, as soon as it came into play, which is interesting, as soon as that 200 week came into play, and I'm talking to, this is the beginning of this chart, guys. As soon as it came into play on this, where is this, on Coinbase? As soon as it came into on Coinbase, it's like it wanted to test it, it wanted to try it out. It's very interesting. So as we look at the current figure now and around that 786 is just lighting up, guys. It's just lighting up. That 786, guys. Again, I went through the diagnostics on that descending triangle originally, and right now it just looks like that 1388. That is I'm in love with that 1388. I just can tell you right now, I love that in terms of the cross differentials, in terms of the implications of that across the different dynamics of the indicators and how it presents itself to me right now. I love that, guys. I really like that level. I just love that level. I may stick some personal cash along that level for a long time and just let it ride, and let's see how this all works out, and let people be excited about it going to $1 million, excited about it going to $500,000 or $100,000 in the entirety of the time after a little bull run to the upside or whatever it is. I think it would really behoove people just to be like, I really like this level. I really like this 200 weekly EMA. I just, in terms of VIPs and what we can talk about. I'm still watching the weekly RSI. I like that. It's a good statement. We may switch back to some different colors here after just, handling this for a moment, just understanding that. But we can still see that very, very nicely. Let's go to that weekly RSI. That's a great statement. I love that, Andrew, because, beautiful. And shout out to the wife and family. I know she's learning to trade. Hello. We're excited that we've been a part of that. Very exciting. And yeah, that weekly RSI. And Andrew, the big question we run into is like, do you want to draw on it? And like, not necessarily, right? Do you want, do you, because you can draw on the RSI. You can. That part of technical analysis. Andrew knows he knows the books well enough. Part of technical analysis is you can develop trends with the overriding concern being the primary levels, right? Being that 30 or that 70, and in the bear trend being that 20, right? Yeah, absolutely. So that's a key focal in terms of like the question on the RSI on this, and different indicators will have different technicals that you can delve into in addition to the what would we say, the standard, like, we understand that it's got a reading. Okay, you got to read it, but can you adjust it? Can you work with it? What can you do with the RSI? Does it actually formulate patterns that are consistent in terms of, does it have its own trend line? Well, does it, guys? Can you? Yes, you can draw trend lines on the RSI. They are frequently respected. So as we get into that, Andrew says he likes that weekly RSI. I'm just going to draw the trend line on it there for Andrew, because I think he will understand the fact that you can indeed, and we can get it with a micro fine kind of level there. But to the extent, sorry about the mic. To the extent that would express itself, Andrew, you're looking somewhere in the neighborhood of 37 as a potential bounce area. That's interesting. Yeah, I mean, there's and it's not too far out of the realm of kind of what we're looking at on this chart. And I'll get into this is the Coinbase chart, just to talk about it. A lot of you guys are on Coinbase, etc. On the weekly, we don't see much other than kind of a drop down here. Right, we see a drop down here on the right-hand side. We'll talk about that measured move. I will pick up on that. I did not forget about that altogether. But what else are we looking at? Well, we're looking at BTC, and kind of, I'm going to say, something that looks, it appears to be a little bit of it's off a bit. I would want to see another contact, a real strong contact, and not have to push through. I'd like to see another hit before I really were to call this a falling wedge. I'd like to see a little bit more in terms of a hit along the top line of resistance before I call that, and I think you guys will agree, before I call that and I'll just put that in red for that reason, before we were to dub that a real falling wedge. It's something I'd want to talk about. I might bring up for discussion, so to see what you guys are thinking about in terms of your chart formations and how you might combat that idea. We do have multiple hits along the top line of resistance. The problem is it could push again, and it would be a question whether or not you would want 1, 2, 3, or just 1, 2 across the top line. We typically want 3 hits on a well-defined movement in a falling wedge. We like 3 hits along the top, 3 hits along the bottom. That's just the truth. So in terms of that, though, that would be, if it's respected. And if we definitely have on this lower level of support, guys, it's unquestionable. We have that lower line of support, and the question is going to be, what have we been pushing down on the line chart? Again, contraindication. You guys need that 1, 2, 3 punch, that primary, secondary, and tertiary strategy. That's what VIP we're talking about right now, guys. In terms of that, having that kind of the plan B and that plan C, okay? Because everyone wants to be 100% right, and they're going to judge you on the 100% right. Well, I think it's a little more interesting if you understand the market well enough. We're going to have plan 1, 2, and 3. We're going to have strategy, the primary, secondary, tertiary. That's it, And people who don't want to think that way and they just want the right answer, I just tell you guys, they didn't get the top. They probably didn't get the top, because you had to look at you had to look at different options here. Is it an Elliott wave formation? Well, I don't know. You have to say, I don't know. We're going to want to, I want a backup routine. Is this an Elliott wave formation? It really looks like it. Okay, well, let's look at the kind of a secondary option. I want to look at the secondary option on this. All right, Elliott wave potential. We're still going to account for maybe a move to the upside. Okay, well, let's look at, what's the second option? Let's say Elliott wave 50%. Okay, secondary option. I'm going to say maybe a rising wedge. Okay, on top of an Elliott wave at 50%. I'm going to go ahead and give that like a, what'd you say, a 30 to 35% chance? If not, maybe the 50 and the 35, but together, I'm going to say maybe an 80 to 85% chance. Yeah. So, what would be the other dynamic that we would look at? There are other dynamics here that we could certainly address. If we get into the top level formation, say like, well, let's go ahead and look at, we have that wedge, and let's say we already had one right here as well. So you had, which one do you want to give the 15 or 20% to, aside from the Elliott wave, in terms of the rising wedge after rising wedge? And we're going to get into some different components of that, how we've redrawn them, when and where, but we've been all over that for a period of time. Is just this one is your solid key core function that achieved an incredible confirmation in, incredible confirmation out. And guys, it's just it gets to the point where you're maximized out at your 100% interval for probability very quickly, and we understand that, and that's what I try and achieve for you guys consistently. It's not always perfect, or not always the easiest thing to do. We keep getting into, like, how do we give credit to the people who were long on Bitcoin? Well, I keep drawing on different time frames. I keep saying, well, we did have this. We also did have this, right? Because at some point in time, and I drew one on the macro yesterday, I wanted to draw one, and this is an ascending triangle. I wanted to draw an ascending triangle to give a little bit of credit to the people who were long Bitcoin, at least in this area. I was one of them, okay? And I brought up the macro, and I said, well, you really need to make sure when you're drawing out your lines, and that was on the macro yesterday, guys. You know that? Okay, so today I'm going to give you the full-fledged credit, okay? Full-fledged credit to anyone who was long Bitcoin in this area, okay? That's it. Full-fledged credit to anyone who was long during this area. Now, in terms of how long, in terms of how high, yeah, that's what we're going to get into a bit of discussion, right? But in along the top of Bitcoin, and after I discussed yesterday, I'm like, okay, why don't I pull this out of the bag, right? You do have an ascending triangle here. Okay, so that's nice. Okay, once this caught up in here and you're in this area, you're long. Okay, in terms of you're going to go long in the market, you're probably going to go a little bit, heavy and long in the market right there. So that's nice. It did, unfortunately, it underperformed. Right, that's the one thing we didn't like about it when it did occur. It's like, well, everyone's stuck. I was like, you're not stuck. You looked at your cross differentials here, and you once you achieve some profit. I know Andrew did that yesterday on a trade. He could have, it was a big trade. It was a heavy trade, Andrew. Congratulations on that trade, very much so. But he could have maximized. He could have pushed a little bit more. When you're running into a frustration, that's when you're understanding of like Elliott waves. Okay, in terms of a compromised ability and the strength to grow on something. Absolutely. When you're running into something that is folding, and it really hadn't folded over by that chance. Or by that at that time, it was indicative enough of a compromise, and really what we want to start off on here was the level of, and we'll get back into the specifics of the current affair with Bitcoin in terms of current pricing, but I do want to talk about that triangulation. Why? And anytime you see an ascending triangle like that, an ascending triangle is going to have that ascending line of support, right? It's going to demonstrate that the buyers are in control, right? That's what it's going to do. The buyers are pushing up. They're entering into the market at those levels. Just bam, we're going to hit this, and here's a line of, all they need is a line of a trend, a line of support, and bam, we're back up in the market, right? So anywhere you see that, anywhere in the charts, it's going to be bullish, guys. It's going to be bullish. It's going to indicate higher price because the buyers are right there on that trend line, just stepping in, ready to execute trades, ready to hammer in and buy more, ready to buy more. Yeah, so that's anywhere you see that ascending triangle, it's going to be indicative of a move to the upside. Now we're going to balance that. How would you have known? We're going to balance that with this original move here from the 58 to the from the 40 to the 58. Then we have a 58 to the 61. So that 40 to the 58, okay, was one level of a trajectory. Then that 58 to the 61 was a much smaller trajectory. It expressed a weakness, right? So that indicated some weakness in the market, albeit we got to operate with an ascending triangle, right? Absolutely. So that would be something we would balance in terms of our our expectations on the trades, etc. Then once we really started to level out here after that ascending triangle essentially failed to really accomplish itself to the degree it could have, then it was kind of clear that, well, we're kind of looking at the cliff here, and we got in, just to revamp on the technicals, guys, because a lot of us weren't necessarily trading together at that time. You guys, most of you were trading. And you can say, well, hindsight's 2020. Well, if it's 2020, let's look at it. How about that? If hindsight's 2020, why don't we all look at it? Why don't you guys take credit? Why don't we give credit to the institutional framework and technical analysis, and why don't we give them all the credit? I won't take the credit. Why don't you guys take all the credit? Hindsight's 2020, great. Let's look at it in hindsight and see how we can apply it to the current situation. Agreed? Okay, copy that. Why? Because that's what technical analysis is. It's taking the previous pricing behavior, applying it to the current situation, and trying to project profits into kind of the probabilities as we manage things. We don't believe in a random walk. We just don't. In terms of the pricing structure, et cetera, we do not believe in a random walk. Okay, that's the counter to technical analysis is no one can predict the pricing. Okay, so we believe we can. Definitely believe we can. So this falling wedge here, Okay, and I just talk about the indications, the degree to which I bring up in the context of like a falling wedge. If we do establish, if this is, because we definitely have this line of support, these falling wedges have been falling flat on their face, guys. I'm just going to tell you through the entirety of our day trading, everything else from the trades on the second basis, the 1 second chart to the 5 minute to the 1 hour, everything, they've just been falling flat. There's so much downward pressure right now on the entirety, on the whole. If this is respected, if we go ahead and choose this as an option, one of our 3 strategic choices for today, I just want you to know, yeah, they've been falling really, really weak weekly. I'll say that, it's been just like flat on its face. Maybe you get a small expression of a price movement up into here. It's not going to be anything significant. In fact, it is. What was that on the weekly that we? On the weekly that we determined recently, and I have to double click that to get rid of that. On the weekly, it looked like we were in this level of this potential. The potential expression here, which I gave some credit to this on the weekly, but I want to go ahead and talk about this again because we do on the weekly. We have a strangely, I'd say, oddly indicated feature. I want you guys to pay attention. This right here along the line of support, you see this, the line that is expressed, this trajectory expressed? Yes, you see that? Do you also see the line along the line of support? That is essentially it's linear, right? It's not a hit, it's linear. So we have 2 linear indications that I've been bringing up, and I want to just discuss them because, to the degree to which this would want to express itself as part of a pattern formation, it really is going to be an extended move to really get in line with that. I want that first of all. Okay, it's going to require you to go really steeply into a level. That's a fact because of the way it has expressed itself, right? So, and it's not always easy to draw on the weekly. I'm just going to tell you that it's not always easy to draw, on the weekly. Your lines, it's going to require some different dynamics, but this is what I thought was interesting for VIP to look at yesterday, okay, on the weekly chart, okay? Now, this would be indicative of the notion that, yes, because the lines have become, and I don't want to say linear, but they're not pivoting. They're achieving a slope within themselves that is indicative of an overall chart formation that we would want a dual hit. Instead of a dual hit, we have an actual formation along what would be indicated as an actual trend line itself. So that's this looks like it has complicated even a bit further from yesterday, from my bringing this up to the group, that we may be in a move, and whereas normally we would hope a move to the upside, right? These are typically going to be something that you're going to expect a break from, particularly when you have, and this is the qualifier, guys. The qualifier is particularly when you're moving into it from a move up, and that's going to be your qualifier when you're entering into a falling wedge and you're moving up into it. Okay, when you're moving up into it like this, yes, that's going to be something that's typically going to want to break up. We have seen this throughout the entirety of the market. I'm talking about in the lower time frames, etc. As people are day trading, and guys, people are slamming back and forth. They are slamming trades on Bitcoin. VIP are literally hammering trades back and forth. I'm talking flash trades, bam, bam. I mean, it's exciting stuff. Also, people accumulating for future. Also, recognizing that we're at some levels that it might make sense to start accumulating. Definitely believing in the long-term potential of crypto. Like that's not even a question, guys. That's not even a question. I know Josh, shout out to Josh. He picked up 4 Ethereum yesterday, very nicely, a nice move, and I know he's prepared. The VIP mantra is essentially to pick up, additional at lower levels, at compound heavier amounts of cash if it can get there, right? We've seen a heck of a retracement thus far. Let's just talk about the entirety of Bitcoin, what we've seen in terms of the overall. Now we're on the weekly. I'd say we can just calculate it if we want to via the measurement tool. We're breaching through that 50% retracement now, the all-time high of 64,863. $64,863.10. Okay, remember that number, 64,863.10. That is the number by which, if you ever need to draw a quick Fibonacci, you guys, look at this. You go to your pitchfork, you select fib retracement. I'm going to show you how easy this is. Bam, you're going to drop a fib retracement. 1, 2, 3. Let's go into the coordinates and let's just let's type in 0 here. I'm going to put 0.0001, and then what is it? 64,863.10. Yeah, I think I remember that. 64,863 and bam, there I have exactly, when I talk about precision, those are exactly the Fibonacci targets. They're precisely calculated. In terms of targeted entries, you don't have to wonder if they're calculated correctly. That's why I'm not being boastful or anything. I'm just saying I know they're calculated correctly, because I know 64.86310, that's been the figure that's been published to me. So we know our calculative figures, just, absolutely. So we're going to feed into this descending wedge, the fact it has broken down with any kind of levels of that are coming in terms of your engagement, guys, in terms of your participation in the market. You may be looking at, well, where is it going? People want to know, well, where is it finally going to bottom out at? I can tell you where I hope it does bottom out at. That 200 weekly EMA would be nice. You guys know that. That'd be very nice. It's already hit that multiple times, guys. It's hit that, in 2018, it hit that, boom. It hit that in 2020, boom. So, at the 13,880, it'd be nice to get a little bit better of a price than that. I have some indications, some indicators. When I talk about indicators, when you click on an indicator, when I say I have some indications that it could go lower than 1388, why would I say that? Because I can express it through an indicator that's available in TradingView as to how it could repeat the function in 2018 and 2020 and accomplish a lower level than the 200 weekly EMA. So when I say I have an indication that it could move to that level, I'm not saying I have a probable indication. I'm not saying it's a probable indication. I am saying, however, though, I do have indications that it could move lower than the 13.8. Okay, what would that be based upon? Well, that would probably be based upon something like a Fibonacci analytic. It would be based upon a Fibonacci analytic, wherein I would state, in the first move here in 2018 on the retracement, the first move we accomplished at or below the 786 retracement, Okay, that's a big deal. Why? Because at the 786 retracement, at or below the 786% retracement, I'm going to go in here and I'm actually going to take this to ground zero just so we cover this analytically adequately. I want to adequately cover this. I'm also going to add in the 86, guys, this 86 line. Where is my 86 level of retracement? Let me go. Please go ahead and turn on your with the 86. Let me make sure that I should be able to draw that now. Let me see if it will give that to me. It doesn't want to give it to me for some reason. You guys calculate the 0.86% retracement. I think you're right on it, in line with that 200% EMA. For some reason, TradingView right now, for some reason, doesn't want to necessarily behave. Let me see if I can get that. It's a template I have built in. It should definitely give it to me. Give it to me. Maybe it doesn't like the fact I've changed my screens already. That's okay. Maybe it doesn't want, I don't know. Maybe we should save that for VIP in the back. That's fine. But in terms of this, we flew underneath that 786. We flew underneath the 786. Okay, so that's a big deal as we look at that right now. Now, what is the 200? And this is an indicator it could go below. It's an indicator we could go below. Okay, I do have indications. I have an indication, meaning an indicator reading. Is it probable? You guys judge that. Let's get through the primary, secondary, tertiary effect of this, right? Okay, the indication is in 2018, we flew through that 786, okay, and the all-time high at around, or at that time, and around was at 19,000. We go to the specifics if you want to in terms of the actual, calculatives in around 19,889, just below $20,000 in 2018, correct. Now, what happened? We flew down below the 786. Okay, below the 786, and we came into contact perfectly with that 200 weekly EMA, right? That 200 weekly EMA was it was beautiful, it was golden, it was the rule. That's where you picked it up if you wanted to make some cash. If you picked it up at that 786, guys, what was your return? Okay, and you got tested, tried and true, guys, but you had a 266% return. If you decided to deploy your orders there, you had a 266% return in was it 210 days, okay? So over a period of time, that turned into an investment for people with serious amounts of cash deployed at that level. That's a nice return if you were deploying serious, heavy amounts of reserve cash into that. Now, that's at the 786. We flew through, we flew through the 786 to the 200 weekly EMA. So that is an indicator that currently we could go below the 13.8. Why? Okay, why? And there's a cross indication here. But because we flew through the 786 in 2018. Copy that? We flew through the 786. This is the 786 right here. This was the 786, which was the 4,161. We flew through that. That's this line right here. We flew through that to a lower level beyond the 786. That typically the lower rung of the Fibonacci. So right now, That 786 is standing at 1388. It's confluent with the 200 weekly EMA. If we were to fly below this 786, you understand? If we were to fly below this 786, I'm going to talk about a very important indication here, guys. Very importantly, we have not discussed this yet. I would definitely pay attention if you guys are looking at picking up Bitcoin at a lower level, guys. Okay, listen to this. We've already expressed in 2018, we expressed a hit below the 786, correct? Yes, we just went through that. 786 is currently at 13,880, correct? Yes. So we have an indication, one, that we flew through 786. So one indicator that we could fly through it again, potentially, has shown itself in the past as being capable of doing that, offering that opportunity to you or to me, right? Yes, it could fall below that because right now we're up at a nice price, guys. We're up at 29,598. No one wants to talk about 13,000, but no one wanted to talk about 30,000 at the top. We were. Yeah, we were. We were talking about 30,000 at the top. It played very well. It played for big cash. People who set targets below, like setting targets right now for the lower levels with backup cash. That's what VIP is doing. So we have that indicator that it could go down below the 786, below 13,880. There's one indicator in 2018. Let's look at 2019 and 2020. Let's look at this second periodic interval of pricing and see if we have a kind of a backup. Let's see if we have any kind of a backup. Let's see what did this decide to do? This interval here. Are we still playing on the previous one? I'd say the previous interval. Is this an entire new pricing cycle? We can discuss that. It's the fact that it didn't set a new all-time high. How would you guys like to address that? How would you guys like to categorize that? Okay, let's assume it's an entirely new cycle. I'm not sure I would really go to that, but let's just work with it for a minute. Let's see where we're at there. Excuse me. So as we look at this here on this secondary cycle, what is the consensus in terms of whether or not this should be treated as a new pricing cycle or not? It had a duration. Let's talk about this real quickly because it has some impact on whether or not we're going to the degree of value we're going to give to not only this but essentially to the indicators. We're going to measure the probability of this hit below the 786 and apply it to the current situation. If you thought that pricing was going to be easy and going to be no big deal, you thought, well, we're just going to get the right answer. It's no problem. He's going to give us the right answer. That's it. We're going to go home. We're just going to set our orders and we're going to go home. We're in the market, guys. These things change all the time, right? We learn to trade. We enjoy this stuff, guys. We dig into it. So whether or not this is, let's see, look at this, guys. 448 days, over a year, guys. Over a year, well over a year, guys. Year and a quarter, almost year and a half, guys. In terms of the entirety, over 400, almost 450 days, guys. That this secondary price cycle, I'd say it's a pricing cycle. That's got a nice amplitude to it. Why do I like discussing it right now? Because everyone wants it to go, when it does go down, we want it to go back up to 64.86310 at least. Correct, right? Well, we have an example right here on the screen. I want to talk, we have this, we're talking about strategizing. We're talking about primary, secondary, tertiary, first, second, and third order your strategy to deploy your cash. There are other markets out there. There's other things to do. We love the volatility. We've loved, guys, the volatility of crypto. We have. It's been phenomenal. I believe it's going to gain more traction and there's going to be more demand in it, hopefully to the same cyclical level that we've already experienced. But I'm showing you right now, just to show you and be frank, that we had a nice cycle here in 2018. We had a mini cycle in 2019 to 20. Copy that. A mini cycle in 2019 to 20. So before everyone's expectations are up through the roof that, well, we're going to pick up and we're going to go back to 64, today is the day when we talk about primary, secondary, tertiary, the first, second, and third order of strategy, that amidst the weight, etc., we've already been shown one time that it even frustrated to get back up to, get it back up to a level that we really thought was interesting. It may be a while, guys. We may be trading a lot of different things. We may be trading Bitcoin in the trenches for a while. Who's ready? We are. I guarantee you we're ready to trade Bitcoin in the trenches. I guarantee you we're going to maximize our price, and we're going to increase our cost efficiency and our trading efficiency dramatically. I'm very excited about the opportunity to do that. We've been in the trenches. You talk about, well, how low? That's unpopular to talk about. What I want to talk about is the notion that right now everyone's thinking of getting in, that it's going to go back to $64,863.10, $64,863.10. We haven't discussed the notion. Well, we have a key indicator. Well, I'm talking about the fact we could blow through, and I think it's very timely to discuss this. Think real quickly. Very timely to discuss this right now, because we're discussing what's the lowest price we can pick this thing up at. What is the lowest price that this can get down to that we can launch our heavy cash into? Well, why is that? Because, well, we like this pricing cycle. We like the pricing cycle. I'm the guy that's going to bring it to you like this, guys. You know, you understand that's why you guys are VIPs. I mean, and that's why I enjoy being around you, because you would too. Is understand the fact that, well, of course we want to deploy heavy cash into it. Why? Well, look at the pricing cycle. Look at how amazing this price is. What about this price? What about 450 days of, let's just measure this out. 450 days of, what was the percentage gain? About 262%. Is that going to cut it? Is that good enough? Can you deal with 450 days and maybe, I don't know, you got a 2x, 3x? Is that good enough for you? Because don't just wrap your mind around the fact that, no, we're going to get back down to, let's say if we get to the 786, the heat map, or even, you know, if we were to recreate from here, this is the thing that'll get you. If we were to recreate from right here, this moment, the point in time, the price right now to the top, man, we'd be looking at a 100% gain. We'd be looking at a 2x. You guys get 2x's all the time. You just do. It may not be on heavy amounts of capital in terms of the market, your position in the market. That's one thing that Bitcoin provides and that crypto provides, is huge volatility with the ability to navigate and negotiate your position. Now, some of the altcoins don't have that. Mind you this. People say, well, we love altcoins. You can essentially, you can be almost assured, guys, depending upon your level, that there's liquidity. Okay? That's a huge, huge facet of altcoins that we don't get into frequently. We don't discuss it enough. If you have millions or billions of coins, you'll see a lot of restrictions on some of these micro coins, DeFis, etc. You can't sell all your coins for a while. Why is that, guys? If you bring all your product to the market and just dump it and say, I want this price for, you know, you start to have to schedule in and account for the fact that your liquidity is going to eat up the market, guys. You're going to eat up every buy order between, let's say, here and the moon, guys. You want to go to the moon. Well, you literally, you're going to eat up every potential buy order if you're shoving, say, you know, whatever the percentage of the market is, or whatever your bulk amount is to dispense with and to sell out in the market. Just understand that's a real dynamic that Bitcoin doesn't quite have. So Elon tested liquidity at the top. Okay, they had a large volume of Bitcoin, a relatively large volume of Bitcoin. They wanted to see how that would interact with the market. As you look at your altcoins, you say, well, I'm just going to stack all my cash at the bottom with these alts. Okay, well, Bitcoin's a little bit different in terms of its features because it has that dynamic in the market where we can achieve the higher degree of probability in terms of being able to sell. Right, and still have a framework together to where, you know, we've been dealing with a lot of ICOs, initial coin offerings. You cannot, and I'm going to say this as a matter of fact, you cannot just go and say, well, I'm just going to throw in 200 grand into this next ICO, because we've gotten, you know, people have gotten 6x, 10x, etc. in like 10 minutes, 20 minutes, 2 days, whatever it's been, guys, on ICOs, initial coin offerings, on Gate. You guys look in the description if you want to trade on Gate. Now, in terms of that, you can't just say, well, I'm going to throw 300 grand in this next initial coin offering. I'm going to make, I'm going to get 5 billion or 5 million or 5,000, whatever it may be, and launch at, and say, I'm just going to liquidate that, and we're going to go off the top, and that's going to be my trade. No, guys. No, when you get in with heavy cash like that, you stick out. You look at the control board. You look at the the dynamics. If we were going to trade over into Gate, if you look into this, you're going to, on this right-hand side here, instead of looking at a different thing, in a smaller market, in Bitcoin can kind of take this. It can take your position. We like Bitcoin because you can still get a 2, 3x, a 4, 5x, a 10x. You can still get that with large amounts of cash. You start throwing those amounts of cash into these smaller micro coins, your order to sell is going to stick out worse than you could ever not want it to get eaten up with buy orders. I'm going to tell you that as a matter of fact, for anyone who has these glory dreams of, well, I'm going to put together 50 grand or 100 grand or 200 grand or $1 million, I'm going to put $1 million into a micro coin, and you're going to be able to sell that just like that. You're going to eat through and chew through every single sell order. Or I'm sorry, every single, you're going to have the mammoth seller. Assume you're trying to sell. You're going to eat through every single order to buy that's on the map, every single one, and then you're probably going to dig into. I mean, I would say that people willing to, all the takers, you're going to wipe out the takers in 10 minutes. You know, literally, maybe for 10 days, maybe for 10 months. You don't know, guys. The exchange could just plug in and be like, okay, we're going to make it. We're going to manage this deal. They're not built for heavier amounts of cash. So when you look at the dynamic of who are we? Yeah, who are you? You're guys with cash. You're guys that, yes, you appreciate the ability to dynamically move between some of these other altcoins. Okay, even at those, when you start moving heavy positions, you know, I just have to say, I was on the phone with Angel the other day. We were dealing with some T-Fuel. Yeah, I mean, matter of fact, Angel's a big time player. He's a $9,350 level supporter. He's top tier. He's chief benefactor. He's a big deal. We were on, he had a position in T-Fuel. We were discussing it was the top of the market. It was a big hit to get into. He doubled down underneath it, and it was indicated. It wasn't me at TradingView, just calculates his. We talked about it, etc. We're on the phone. We're talking just so you guys understand liquidity. What Bitcoin offers us that the other places don't offer us is the ability to move large amounts of cash, potentially multiple 2, 3, 5, 10x, etc. We're going to look at the patterns. We're going to look at the Elliott waves, at the chart formations, etc. Technical analysis. We're constantly going to be gauging our level of involvement, but it has that liquidity. He was on T-Fuel the other night. We were on the phone. I'm like, well, at some point, you know this. You always tell me you got to hit that button. You got to book that positive trade. He was at the top. T-Fuel was at the top of the market then. Now, he was right in position into it. He had doubled down in the money, etc. And he just said, man, I'm going to do it. Yeah, London, I'm going to do it. I'm going to hit the button. And bam, he hits the button. Boom. What happens? Right? So understand the liquidity function that, Elon did test at the top of the market. You guys know that. Elon tested heavily at the top of the market. You guys know that's when the fire came raining down for the first time in Bitcoin, right? Yep. You guys know that. So as we, let's see, backward adjusted, none. I don't need that. Let's look at Gate for a little bit. Let's just, Gate Exchange is the primary trading tool that we use. We love it, guys. The buy, sell orders, the limit orders, etc. It's a phenomenal setup. As you guys look at it, setting your limit orders, you go into stop order, right? Yeah, you go into a stop order. You go into less than or equal to it. The price drops less than or equal to $8 right there. I want to sell what? Well, I'm going to have to sell it. My price can be $7.50. I want to make sure that it gets picked up in that market. When might not it get picked up? Well, if somebody's just dumping a bunch of okay, yeah. If all of the orders if you get pounded through, people who trade a lot know you can get work through on this. You need to pay attention on your stop orders. This is the stop order. This is the stop loss order that you can enter into if it hits my trigger price. If it goes down to say $8, or if, not Bitcoin, but if it goes down to, let's say if it goes down to 25,000. Okay, let's just say I'm going to stop loss at 25,000. What are you going to sell at? Well, if it's 25,000, you say I'm going to sell at 25,500. No, you have to be under that trigger price. Depending on how quickly the market's moving, you have to give the exchange the ability to operate. Guys, you have to give them the ability to operate on your stop loss order. You have to. Okay, don't get caught with a big position and be like, well, I set it for 25,000 and I'm going to sell it for 24,999 cents. Oh, you're going to work that spread into the bid and ask and everything else on the fly, not even knowing the conditions of the market. If it's hitting up at around 25,000 and it decides to dance for a while, hey, you're probably going to be all right. Guys, understand the dynamics of your stop loss orders. The fact you have to appreciate the exchange dynamics, the market dynamics. Is it a balanced market? Is it an imbalanced market? Is it things are operating kind of angry to the downside? It's flying through the floor. No, I mean, understand if $25,000 were your stop loss order, and let's say you're working on Gate. We love Gate. It's a phenomenal platform. A lot of ICOs. Shout out to all you guys getting 5x and 10x, etc. 2x. Anyone getting a 2x in 2 days is nice. Forget the 2 minutes and 5x plus, whatever you're getting is nice. So as we look at this, the $25,000, that's your trigger price, this less than or equal to, that tells you, yes, when it goes less than or equal to this trigger price, I'm getting out. I want to sell. My price on the right, that USDT, I'm selling at, and I'm going to make this real reasonable. It seems like it could get aggressive to the downside. Oh, okay, so you're going to make it real reasonable. You're going to be at the top of the orders that are flushed out quickly, right? So you're going to determine the reasonableness of your, and you, guys, in terms of strategy, like this is kind of top shelf stuff you guys need to listen to, right? You guys who aren't setting these, you need to understand if you play this too closely to this trigger price, it's going to hit it and you're gone. It's gone. You're gone in terms of executing. You're not going to execute your trade. Guys, work with this on smaller amounts of money. Please try and feel out the exchange on something that's aggressively moving. Find something that's aggressively moving to the downside. Find something that's pouring through. I'm not talking about a little dance to the downside. Find something else that's just cranking down through there. Set up a small trade, not financial advice. Set up a small trade. Say, okay, I want to try this. I want to see, with a small amount of money, just a small trade and watch the dynamic. It didn't even hit it. I can't believe it didn't hit. Maybe you were too close. Maybe it's moving so quickly to downside. Maybe it didn't hit. There was too much volume at that price. It didn't execute at that price. Be careful, guys. Be careful. Understand the trading dynamics. Understand the dynamics of the market. Understand how nice it is to have to strategize at that level. That's some fun stuff, right? Typically, you got the maker and the taker. Anytime you enter into a limit order, okay? And the limit order is going to be real easy on gate. It's just going to be what's your price, right? What's your price? What do you want? What's your what's the amount you want to buy? Easy stuff, guys. You guys understand that. We don't have to go through all those essentials, but just understand the idea of a stop loss. I see we lost some interest on the overall stream when we talk about stop loss and how to make sure you don't get burned on one. Who do y'all think people getting burned on them? I don't even think they're using them. That's all right. Yeah, I'm like, that's all right. We want people who are using them or who want to use them, who want to learn about them, right? Yeah, we do, all the time. That's what we want. We want the top shelf, top tier people who don't necessarily have to be there right now, but who are trying to get there, right? That's what we want. We want that blue collar to white collar kind of dynamic of people that are just cranking into the market, or they want to. They got dreams, right? They understand how this stuff can work, and they see themselves in it. Yeah, the positive dynamic every single day. That's what we want. That's what we have. Very happy to have you guys. Let's look at, I want to look at the chats real quickly and kind of check out what we got. Enjoy these sub 30, possibly 20 levels. If you believe we will see new all-time highs in the future, you're looking at a great value. Bingo. Beautifully said. Absolutely. That's a great statement there, Andrew, and I absolutely agree with each and everything you just said. And you know I do, huh? And Andrew's going to bring it like that. He's going to let you guys know, hey, if you're long in the market, beautiful. Right, absolutely beautiful. And I'm just I'm stuck on this dynamic right now of this descending triangle because arguably we've just broken out of something, right? And people want to argue about, they want to talk about what it is. It's the Elon Musk buying zone. It's that whatever else, guys. I'm going to tell you what it is. It is a potential big move. Potential big move. You see that now on the candlesticks and the wicks and that's a potential big move, right? You want to triangulate that sucker. You want to recreate a measured move down from here. You want textbook. Glad you guys stuck around. This is a little easier to see, huh? I would say so, huh? on gate. I'm glad you guys stuck around. Thanks, appreciate that. And as we look at this, boom. And the people who don't even want to learn about a stop loss order, that's unbelievable. So as we look at this move down, guys, I mean, you're starting to see on gate, it looks real easy, doesn't it? It looks pretty interesting, doesn't it? The hit to the top, to the bottom, to somewhat the top, to and we're going to work with whether or not you start to dive into whether or not this is a variation out here, an attempt to break through a descending triangle on the top side, right? I'd say so. So this is starting to look a little bit cleaner. I started off, I wanted to go into gate and just stick on gate, but not everyone's using gate. I don't know why. It is the place to be. It's where all the VIPs are trading, and they're doing great with it. It's fun. It's nice. Andrew, I want you to get set up on it. I don't know if they set you up on the KYC yet or not. You're gonna have fun. You're gonna be slamming through trades. Just wait. I won't hype it up too much. I think you're already involved enough with it. You're gonna be able to see what all it can do. So we're gonna question whether or not this was just a temporary breakthrough and a push. I said in the original version here, this was just maybe a push. Okay, when I mean push, just the push winds up being something that is going to adjust the overall magnitude potentially of your triangulation. Okay, anytime it breaks through a triangulation, you're going to say maybe it's a push, right? It's going to push this line of resistance out, right? It could even, if it wanted to push and push, it could even, instead of just, if we had some sort of a triangulation, I'd say arguably what we really had here, just so you know, so we recreate this very well, very precisely, okay? We had a catch of a symmetrical triangle, okay? Symmetrical triangle is a continuation pattern, correct? Yes. So it's going to continue from what? Well, it's going to continue from the drop in from the top side. True? Yes, true. It's going to continue from the top down. I mean, essentially, if it feeds in from the top, it's going to continue, down. If it starts down, it's going to continue down. That's the best way to say it with some repetitive language there. So as we look at this symmetrical triangle, which included the candlesticks and the wicks, guys. It included the entirety of that move in terms of the designation of this, right? I think that's accurately what we started with as you really start to pull back and look at things. The more that things went from this, and it's just a coil. Okay, we got into a coil. We call these coils. Now I want to talk just about the candle wicks because Andrew, I know you're big on dealing with the wicks, right? So he is lead support analyst. I'm going to say that for Crypto Kingdom and for for the group, for the team. He's the captain, guys. shout out to him for the $1,000 support he's given to the community. So that's for the whole group, guys, to energize you guys and let you guys know he's doing well and he's there for you guys. Also, Angel's there for you. You guys know that at $9,350, our chief benefactor, and also to Josh. We give a big shout out to Josh, who's been stepping up in the plate and is turning into one heck of a guy. I'm looking forward to seeing what levels of involvement you want, Josh. It's here for you to enjoy, and so is the community. So the more you step up, it's going to be more and more exciting for you and everybody else. You get to know Andrew and Angel in a different kind of way. You know, you're stepping up into kind of a different role with them and with the entirety of the community. It's very nice to see. We're excited about that. As we look at this coil, okay, a symmetrical triangle is going to be called a coil. Okay, you can see this from the wicks to the sticks, but this is very well defined, and I'm on the candles for a reason. But you can also see it just very clearly just pour out of this. Just look at this, you know, as we got into the retracement, just this pour out of this, just beautifully well done. You see the respect of this top line and the bottom line. The bottom line is going to be your support. Just a beautiful respect, just hanging on, and then just break through with a catch in line with this kind of bottom formation, close to it, guys, close to it. Essentially right in line with this previous low of this previous low wound up being the support and the kickback right up into this triangulation again. So very, very interesting to look at these formations with the understanding that you know, it's just there's almost a perfect conformance with this triangulation. And as we get into this, just this move right here, just pouring out, the kicking back along this line of previous support, kick back up into it, and then we had, you know, kind of a differentiation of the pattern diagnostic there. I'll say that. So as we want to compare maybe what we started with to what we pushed into, okay? When I say, well, we pushed, right? Well, we tried to conquer the entirety of this region. We tried to get up into a bull flag here, and maybe another one. We got into a pennant formation here, a bull pennant formation. You guys can see that. Let's look through that. But it looks like we got into just a pennant formation that just wouldn't stick. Right, it just wouldn't get there. You can see the consolidated, that pennant formation, and that's a nice try. Huh? Look at that. Huh? Like it wanted it to pretend like it was a nice bull pennant. You could just fly to the upside. No, it couldn't. It couldn't do it, guys. It wasn't a buying pressure. We didn't have the demand for the product at that point in time. So what happened is this coil formation here. We had some support along this essentially previous line of support. We did hop back up into this, guys. That we tried to, you know, form this pennant. We couldn't get it, and a big barrel down, guys. A big move down. And when that pushed, guys, we've created this here. Now, the extent I'm gonna bring up this top level incident here, because we do have, if we respect this line. Okay, if we respect this top line here, we do have in this top line of resistance and view this as an outlier event, we do have right in here, we have a retest, which could have been a confirmation to the upside, right? Could have been a confirmation to the upside. Instead, it was a retest, a hit along this previous line of resistance, turn into support, and bam, we work back down into essentially the lower levels of support that have been established by the previous hits along the lines of, let's say, the initiation of this, I'd say this consolidation, this consolidating channel for about 61, 62 days now, thereabouts. So that's how we come up with this line of resistance that I think is very well respected right now as we talk about the potential fallout of where we're at right now and what does this really mean. Okay, what does this really mean in terms of kind of if we're going to deal with this previous line, and I want to bring up that this move up in this area, up in here. Okay, because you'll see that attempt to confirm and move to the upside. What happened? We bounce back in. Right now, if we go with the bottom line of this wick formation, the bottom line of the wick formation, in line with this level of support here, we have one contraindication that could help us right in here. This one level of support, the same way that in the origination here of this move amidst this coil formation. Okay, we had that which did act as another level of support. We've broken down past this original already. We've broken down past this original level of this hit in around the 29,908. We've broken down past that currently on the bodies of the candles. That's what's concerning people right now, is we've broken down past the bodies, you know, on the bodies of the candle. And look at this, just the same way that we were outside of this here. And I bring this up on the outside. Why? Because this could be a huge fake out. This could be a huge fake out. we could have everybody stacked with cash at levels below, and we could be experiencing a really large fake out, right? We could. So in terms of that, just understand that this could represent a very large fake out to the community at large right now. So I would just welcome you guys to explore that. I think that's worth exploring without a doubt. So you guys let me know what kind of questions we have right now. It's not in terms of clear-cut answers. The clearest cut answer you're going to get is going to get to the 24,777, okay, or the 20 what is it 24,777 or the 23. Let me zoom 20. Excuse me. Let me change the color of this so I can definitely see it. I may need to go back to the black. Let's go back in black. Let's get this done. Let's go settings. Let's rewind all this. Let's get back into what we like to see. Let's get back into, there we go. Just a little bit different today. I wanted to make sure that was clear enough for people to see. It's not necessarily, it's not necessary that we do it one way or the other. I'm just a kind of guy I like to see this kind of price action all the time. That's just nice for me to see that. So in terms of that, we want to welcome definitely Eloise join as a new VIP member. And what do we have? About 6:30. We're about to get into some different time frames where some people may be wanting to log on, if but for 5 minutes, 10 minutes, just to let's see. BTC to 15,000. It could happen. Yeah, we talked about to 13,880 is the key indicated level. And currently, what we're looking at is that the bottom line 65th percentile would be 22,702, or the 61.8, which would be the 24,777. So that's what we would look at in terms of the entirety of where we would expect the move to go. We can't say it would be limited at that level. You guys know that. We wouldn't say it's going to necessarily catch at the golden pocket if it does decide to go down. I would love to see a fake out, wouldn't you guys? I think a lot of people would love to see a real strong fake out in terms of where things could go. That would be the best play for the market, I'll just tell you right now, because right when the rest of the market becomes very bearish, and everyone is talking about becoming very bearish, I would love to see a huge fake out and have just a few people in the room while we're talking about it and be like, we talked about that, huh? And not that anything we just talk about is hypothetical, but as we talk about today is about the primary, secondary, and tertiary, about the strategy. You know, it's nice to have that in our arsenal. Is that, well, we're definitely going to be playing for the fake out, right? So yeah, that's what you know, we're talking about it now. What would you guys do? How would you trade a fake out? Well, you'd probably establish some positions like what Josh has done yesterday. He went ahead and bought in some Ethereum. Yeah, he bought in a decent amount. Yeah, a decent amount. He bought in 3-4 Ethereum. So that would be the first kind of step, I'd say, is maybe getting involved in that. Some of you may trade options, do some different things. I never really I don't talk too much about options because I just what would you say? I don't like seeing people get hurt. That 200 weekly EMA, I think, is a key indicator feature as well. And if you guys have any questions specifically, I'd be happy to take some questions as we go through. And as we get through that, you guys let me know what questions you have. I'm going to have a stogie. So you guys let me know what questions we have. Let me read through some of these. Julian in the house who had just answered multiple questions. I've never had about loss or about what? About ICOs. Okay, good. You guys let me know what questions you have right now. Jump up with questions. We're looking at the weekly chart on BTC. I do think also we told. Let me see if I have that still up on another screen. I may or may not know. I don't think that I do. Okay, so as we look at things, you guys let me know what your questions are, and we'll roll through them. If you guys don't have any questions, then we can wait around and kind of repeat this for anyone else who wants to join in now, or they can just rewatch the beginning of the stream. It doesn't matter to me. You guys let me know what you want to do. We have Andrew, Jag, Carlos in the house, Julian. So let's see what we got. Boom, 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 boom. We do have a new name in the mix. Who is this? Jakes 8533. What's up, Jakes? We have a level of VIP membership. If you would like to join the VIP, best traders I know. Period. I know a lot of them, brother. I know a lot of them. Best traders I know, and I know a lot of them. Like a lot of them. And they know that. Yeah. Hmm. A lot of the traders that I know, they know the VIP are the best, and the VIP know that they're the best, and they know that I know a lot of traders. It's very interesting, huh? So, let me see what enjoy the sub 30. So a lot of talk about RSI, etc. I think if we don't have any questions, then I'll just roll with things. I think I'll just we'll stop the stream. Maybe we'll do something tonight. Maybe we'll do a VIP only stream tonight. If you guys are new and you haven't been here since the beginning, hit the like button. We're doing kind of a VIP at this level only. We switched over to gate. I went over the stop loss. It might be nice for me to go ahead and cut and let people know towards the end of the stream tonight there was a kind of a primer on stop loss. All right, because people have been asking about that. So maybe that would be a good thing for me just to say that. Yeah, what you got, Jakes? Is that still Jared? What's up, brother? We got. This is a nice one. Surprisingly, I'm all about Partagas, Monte Cristo. My uncle is a cigar dealer, international art and cigar dealer. I'm talking about cigars at like $5,000 a box or whatever. He'll go to London or he'll go all over the world trading, and antiquated, like 100-year-old cigars, stuff like that. This is a nice cigar. I think you'll like it. This one in particular is called a Stallone. The Stallone is a nice cigar. It's well made. I just enjoy them. I smoke Monte Cristos, Partagas, etc. But Cohibas are just difficult to get a nice, consistent verification that they're authentic. So I'm not sure what you guys smoke, but I know you guys are into smokes, stogies, etc. So yeah, we enjoy these. We went through a lot of things in the very beginning in terms of that. Maybe I think we do the best just to let this roll, let you guys work into your pattern formations and your charts, primary, secondary, tertiary. Okay. Do you want to go? What do you guys want to do? Primary, secondary, tertiary. You want to go conservative? You want to go maybe mid-level, and you want to go aggressive? Because you can draw out 4 or 5 different levels of you can throw out 4 or 5 different levels of Fibonacci's and charts, etc. They're going to make you, you guys, do you want to decide that? You want me to go over kind of a primary, secondary, and tertiary? Like maybe aggressive, mid-level. I mean, I think conservative is the place to start right now. I think we would agree with that. Conservative, given the nature of the downtrend, right? We talk about a fake out. We'll be able to pick up on positive price action and a new trend. We'll be able to pick up on it. Do you guys have your alert set? Do you have your alert set? Okay, that's going to be trend line, right click, add alert, up, and boom. 10 seconds. Okay? 10 seconds. You're already notified if something's going to move to the upside. Just like that, you're covered. All right? As tightly as you want to be covered, you're covered. Right? So it's that difficult to catch an uptrend. So there's your compensating for taking a conservative approach. If you want 1, 2, 3 in terms of your strategy being a first level order, a second level, or a third order of strategy. If you want to go conservative, park cash below, but you want to hop into something that is, that's going to gangbuster up, right? And some of you may be holding right now, and you're like, well, we want that to go. Well, you're in a downtrend. You just are. I guess the risk you would take is like, well, maybe you're hoping for a movement up so that you could maybe dispense with. Probably as people get so caught onto the idea that it is going to continue to go up, which has gone down 50%. I don't like people losing money. Most of you have backup cash. You have backup reserve capital to deploy at lower levels. So I'm not super worried about anybody here. You guys are doing a good job of trading, et cetera. You know what you're doing. You've been around for a while. We just don't want people to get hurt in the market. That's just it. Financially, we don't want them to get hurt. We did call the top of this sucker, and it was just it was good for the VIP, et cetera. It was good for the guys who were training at that time too, the alpha training, et cetera. So what do we have here? Carlos, leave some cash free for more aggressive trading. That's good. I like that. That's nice. That dovetails the 3 strategies together. If you're going conservative, mid-level, and aggressive, your technicals may be able to kind of compromise those two and make it not necessarily as selective, right? Or as exclusive in terms of you have to choose 1, 2, or 3 with your technicals and your with your indicators, as I say this, but with your technology. Let's say this. Technology is nice because maybe we don't even necessarily have to do that. That maybe as I think through that, as we set alerts, as we set stop losses, as we set these different things, definitely you're going to want. I mean, parking cash at lower levels. I think that's something that you can't get past. That's a strategy in and of itself. But the ability to deploy more capital, if we were to get involved in, and I mean, I guess you have to have as sure as the market is variable. I think this is certain. As sure as the market has variability, as there's there's going to be variability in the operation of the pricing behavior. You also need to be as fluid in your redirection of your capital. We talked about that in your strategy. We talked about that yesterday in terms of how many of you have solidified that all of your exchanges you could liquidate in 2 seconds. You could move to cash in 2 seconds if you had to. How many of you have decided that, or have accomplished that? I understand it takes a lot of effort to get involved in all of your exchanges and be able to liquidate in 10 minutes if you had to. Can you set stop losses on all of your exchanges? Or, well, no, this isn't holding, because we have this idea, and it's very interesting with crypto, things go to cold storage. Well, you can't liquidate that, right? You're going to upload this. So some people are in that dynamic where it definitely makes a difference. Could you liquidate? What's your agility in the market? Right, that's an important thing. What is your level of agility in the market? Like that's a key concern as we look at things. What's up, brother? Hey, as we discuss the weekly chart here, just look at the weekly. I don't see anybody talking about the weekly. I see people talking about the hourly, the daily, the this. I mean, we could come up with 50, and we have 50 different chart formations throughout the process of the last 60 days. There's a million ways to explain one thing, a downtrend, right? At some level, I'm going to go ahead and bring this up. At some level, I have brought up the fact, and I'm going to be true to form on this. I have brought up the fact along the construction of this. I have brought up, and I'm going to say this top level formation, and I'm going to be true to this, guys. And if however this works out, I want to be consistent. I want you guys to understand when I tell you I said something, I said it. All right. When I tell you I called the top of Bitcoin, I called it. All right. What I want to talk about also is this. In around the top of Bitcoin, and not everyone knows this, guys, in around the top of Bitcoin, when I was calling the top of it and explaining it to people, I was saying, well, we have a complication right here. Let me go ahead and change these to a bright green. Let's go bright green on this just so we can have a differentiation with the pricing. When I was calling this, and when I was talking with people about this, let's go to the daily just for a moment so I can go through the entirety of this. When I was calling this with people, and I was training people just in it's just general market theory, guys. It's not financial advice, but I'm certified in markets from Duke University. So when I was calling this and say, well, we have this run up here, then we have a compromised slope on this next level, that 58 to 61, and then we really frustrated over up to the 64, 86310. Okay, I did say in around them, and we would expect this, and I called this out, we would expect this to fold over here, and then I said, and then we're going to be going like this. No one could understand what I was talking about. Like, what do you mean like that? I'm like that, guys. And I said, at some point, and true as day, I said, at some point, we're going to want to go like this. And you guys review the tape because this is interesting. At some point, we're going to want to try, and we're going to pick up and want to go like this. I think I said it exactly like that when I was calling the top of Bitcoin, etc. Before these structures were in place, before this pricing action was in place, that at some point, and I haven't really brought this up, at some point, we're going to want to pick up and we're going to want to go like this. And I would say, now I don't know if it would be in here, let's say up in this level. And let me shorten this up a little bit just to not create any kind of expectations. I don't know if it would be up in this level, or maybe down in this level, or even even potentially. But I did draw out probably 10 or 15 times. At some point, we're going to reach a level where we would want to pick up and move to the upside at a Fibonacci, at a level of the Fibonacci's. So in terms of the all-encompassing kind of strategy, I would say, regardless of your level of operation, how aggressive or conservative you are, whether or not you have a 1, 2, 3 punch combo. One is I'm going to be my primary is to be aggressive, or my primary is to be conservative. The IPs are conservative right now amidst a downtrend, ready to pick up at any point in time were the trend to reverse. Absolutely. If we get an indication or a pattern, some sort of verification that we are in a position to reverse, Angel is here. Angel is here. What's up, brother? Angel's here. What's up? Nice to see you, Angel. Hey, nice to see Angel. Look at Angel showing up strong. Angel, cigar time. Definite cigar time for Angel. Angel is our chief benefactor, and we so appreciate Angel. We appreciate you being here. I'm going to take just a second and unwind. I may throw a little bit of music on for Angel and just let this roll because Angel deserves this. I wanted to set this up. Josh mentioned that maybe we should have some of this in terms of this. Let's play Angel a little bit of music. What do you guys think? I think he... Look at Angel powering through. Angel, this is your music here, brother. Angel is the chief benefactor. He has done extremely well. We welcome him back to the crypto kingdom in the VIP. Very nice. Angel bringing some heat. We appreciate that. Angel, we love you, brother. Nice to see you show up. We missed you last night in the conference call. Nice to have you back. And yeah, way to bring the energy, way to bring the action. We really appreciate that. Carlos is here. Nice to see you. I think Andrew is still up. What's up, brother? Nice to see you. You guys, we needed to do a little plug and play with the music, and it's just perfect for Angel being here. I just don't, you guys enjoy it. Chat up a minute. Once you guys chat in there, just play some music. You guys chat for a minute. You don't need to hear from me. I'll put the chart up. You guys chat for a minute. All right, that song has to be literally Angel's song. I think that's Angel's song. When he powers through like that and he comes through real strong and heavy, that's his song. Angel, I'm giving you that song. I licensed that song so we could distribute it all over the world or whatever we want to do for purposes, and I'm giving you that song. Just it's yours, brother. So thank you for all your help and everything else, and that's your song now. If you like that song, if you like another song, you let me know, and we'll fix that up too. But yeah, Angel's a big time heavy hitter, been around since $7.50, and it's just nice to see you. I know you had a big deal closing today. Prayed for my brother. I hope it went well. Yeah, I bet it did go well. Angel had to close a deal today. He was in a meeting. He had to deal with some people, and I want him on my side. He's on my side. He's on all our sides, so you guys don't have to worry about that. But I wouldn't want to negotiate with him. I'd want to be, I don't know. What would you guys think? Huh? I don't know. He's a tough guy. He knows he's a tough guy. He's a good guy. Started flipping through a few of these different coins. I'm going to do this for Angel because we didn't get to do this last night, did we, brother? No, I want to flip through these and see. You didn't get to see the screen last night on that, guys. I want to just flip through a few of these altcoins. I want you to see how low these prices are. Look at this, guys. FXS. Look at this. I want you to appreciate what's going on with the pricing dynamic here. This is on the weekly. As we look at the weekly, look how low these prices are getting. Look how nice this is. You see the price. This is earlier in 2018 on the left. Look how nicely this is retracing. That's on CELO, CELO. We can look at 03. That's another one. Look at Alpha. We'll look at some of the major ones. But guys, look at how well these are retracing. You guys see this? This is our philosophy at VIP exactly. This is what we want. Look at this. Look at this, guys. Look at how well this is. Fmr. Fmr is a hedge fund cryptocurrency, a popular currency, guys. It's done well. It's not a security. It's not really. I don't. Depending on what state you're in, they're not going to call it a currency. But just look at this, guys. This adds a lot of satisfaction to our group as we start seeing, like, we've been preparing for these days. Yeah, yeah. What is it? Mama said there'd be days like this. We hoped that there would be days like this, because look at this. And as we start looking through just all these different, look at this retracement. Guys, you see the retracement on the screen? Hello. You guys know what we've been preparing for? Yeah, that's what we've been preparing for, guys. We've been preparing for all of this. So we're going to be flipping through a few of those coins. Angel, since you power back in and you say hello, just to be here. It's just nice to see you, nice to have you here. I'll put a little bit of tunes on. I like this tune. This is a good tune. We'll have to rewind this a little bit. I hope that's not too loud for you. I hope it's loud enough. I love this song. Nice groove. Look at this. Let's look at comp. Huh? Look at comp. Look at this retracement. Beautiful. Let's look at alpha. Look at that retracement. QNT. Ooh, QNT still kind of up there. You guys paying attention? What's QNT doing? What's Quant doing up there? You guys paying attention? Angel, you watching then? Angel, you looking at Quant? What's Quant doing up there? I just have to ask, what is Quant doing up there? It almost acts like it doesn't want to be down there. I don't know, Angel. I put a star on that one, huh? I already have on my desk. I'd write that down. Just take a look at that one. Because I don't know what it's doing up there. I just really don't. I'd look for a bullish formation. That's on the weekly. Okay, we dig into the daily. Let's look at the daily. We don't like that. You think it can catch? You think it can catch? I don't know. Let's take a look at Quant. I'd maybe say that maybe, Andrew, you're our lead support analyst. I think we should do some analytics on this one. You think that's a good idea on Quant? Yeah, QNT USD. You guys make a note of QNT USD. Let's take a look at that. I'm interested in that. That NASDAQ always surprises me looking at that. Wow. We did some analytics yesterday on the Dow Jones. Oh, yeah, we did, didn't we? Yeah, it's kind of interesting. You guys want to see an analytic on the Dow Jones? Okay. On the monthly, let's look at the monthly on the Dow Jones. I want to give you guys some context in the overall broader markets. Definitely not financial advice. You guys pay attention. We appreciate Angel being here for a moment. I want to talk about crypto, its correlation with the overall markets. Correct. Yes. So, what did we have in the Dow Jones in 2018 through 2019 and 2020, leading into this big drop off? We had an ascending wedge. Yes, we had an ascending wedge. It broke out up above and then it crashed on down through exactly to its to a key EMA, huh? Yeah, 200-week heat map. You guys are gonna get this, right? The 200-week heat map. What are we focused on Bitcoin? The 200-week heat map. So what did this fall down to in the Dow as a total? It fell down to the 200-week heat map exactly in 2020 in March. Bingo. You got that? Hello. How's it going, guys? It's going well. You got that? Copy that. Everybody writing that down, huh? Huge. All right. Now, what do we run into now? My goodness me, it seems like we were in an ascending wedge. We tried to power up through. We cranked down to the 200-week heat map, right? Now, we're in another ascending wedge. What are we doing? We're powering up through, just like we did before. So it's a very bearish pattern. You guys know that? It's a bearish pattern. What just happened here? We cranked down into a major support level, right? So as you look at the market and what it's doing, I just want you guys to be prepared for the fact that we're entering. We've already exceeded and gone out up above. We've gone up above what is we're trying to beat guys, you're trying to beat a pattern that can't be beat. Because if you formulate another one with something else more stronger, this is why these are very reliable. Because you're going to crank back up into something that's just going to collapse on itself. Okay. Typically on TA, it's not easy to beat one of these guys because the trajectory of it, it's already something this highly slanted, with this degree of slope, it's just tough. So you've done it here. You've gone up and out and above, just like it did here before we crashed back down in 2020. We're talking about the overall market's Dow Jones, right? I'd watch this. So we're in a bearish pattern. Everyone knows that. We feel it. But what is that? How do we look at it technically? Just like this. And the fact that last time we broke out up and above, I appreciate that very much, Angel. In the house, huh? In the house, yeah. Angel gets it, huh? He gets it. Everybody else trying to get it. Everybody else gets it too. We got to play Angel's song now. Everybody, we got to play Angel's song. He gets it now. We're talking about the broader market, what it's going to do. You guys understand it. Yeah. It's a good little talk we're going to have here. Not everyone's going to get it, but I mean, in terms of receiving the talk, it's a good one. Where's Angel's song? Not that one. There it is. Let's crank up Angel. For Angel in the house, cranking up the dollars. Enjoy. Angel, light your stogie up. Relax, huh? This is your music. Put it on for you, huh? Relax. This is your channel right now. You and Andrew and everybody else, you relax. I'm on a stogie. You have one. Angel powering through when it counts. And it counts consistently, and he consistently powers through. Love it. Value, you got that, brother. We're constantly focused on it. I want to bring you these details on the overall market and the formations, everything else, so we can take a look at them. Let me, let's let your song play for a minute. I don't know if you can hear me. If you can't, hey, it's all right. Turn yourself up. You guys are smart, right? But look, ascending wedge. Last time we busted out at the end of an ascending wedge, but we busted out of this one, boom. Everyone's wondering when this is going to happen. We're set up for it technically, beautifully set up for it. Everybody's like, now you know why. Now you know what it looks like. Beautiful, huh? Now you know what it looks like. Now you know what that is. You know what everyone's talking about. You know, technically, this is an expression that we understand beautifully. Beautifully, we understand that rising wedge. Angel, you looked that up, brother. You looked that up on your screen, right? Yeah. Just look up wedge in the back. I'll give you the page number, etc. Let me give you the page number for your book. Don't worry about it. We'll pick it up. What you got? We need a search function. Normally, I just open it up, you know. Whoa. I open up to page 288. What do we do after a prolonged move? This one. This is a prolonged move. Okay, page 288. I'm pretty good with this thing. All right, I've had it in my hands since high school. It opens itself for me. What do we do after a prolonged move? This one? Well, we get ready for something, right? We do. We prepare before other people do. Andrew's shouting out. Fully prepared. Absolutely. Stock market timing, page 277. Why don't you start there? You guys know this. Once you look at maybe prolonged move, rationale, why don't you look at stock market timing, page 277. Got it? Cool. All right. So yeah, in the Dow right now, everyone's wondering, well, what's going on with the market? That's what's going on with the market. We have an ascending wedge. Correlation or not, we didn't get a correlation today. We had one yesterday. Sell off. You know, it was a super Tuesday for everybody in the market. A big rebound. Boom, boom. Right? Yeah, big rebound. So no correlation. It was definitely a correlation in March, right, Steven? So as we look at that, guys, understand last time we had a prolonged move, huh? Out and down, huh? You guys got the page numbers. That's good. As we look at this, not financial advice. You guys know this. Just understand this doesn't typically end straight up to infinity. Okay, the degree to it does. You know, to which it does. You've got like Andrew is saying. Andrew has got he's got the reins on it. He's got the reins on. He's prepared for this move to the downside. I'd like to really study the correlation now with the, here we go, BTC USD, and boom. Can it give it to us? Oh, all right. This is what happens when you do the wrong correlation and comparatives. I'm not a big fan of correlatives on this program. I've seen them on different programs. BTC USD, let's do the correlation with the market, and I don't want to do that entirety of that. I want to do the BTC USD. There we go. Okay, now BTC USD correlative. Okay, look at the correlations, guys. On a correlative basis, we have Bitcoin with a peak, we have the Dow with a peak. We have a little bit of differentiation here. 2018-19, okay? The yellow line is the Dow. The teal line is Bitcoin, okay? We have this huge run up after 2020. We have a correlative dip in both Bitcoin and the market, okay? That's correlative. This is roughly correlative, I'd say, with a bottoming function here, this curvature formation. I think this is wonderfully correlative between Bitcoin at the bottom and the Dow at the top, guys. Take the support level here instead of the entirety of this line. Take the support level on the Dow here, and you'll see that nice curvature formation. Boom, run to the upside. Boom, run to the upside, and a fall down, okay? So this is just getting into some dynamics in terms of the overall market and what we're expecting, right? How we're planning. Andrew's prepared. He's the lead support analyst. We want to know how, Andrew. We want to know how. Angel powering through with another $500 a day. Yes. Yes. 9,850 total. He's gonna crush 10 grand. I knew you would that. I know where you're going. It's gonna be fun. He's probably like, because you know where I've been. You know, we're like that. It was weird things will happen. I'm like, you know, something. He's like, I was there. I'm like, I'm sure you were. So as we look at this, guys, the dynamics, this correlative between the Dow, which has been so impressive. The Dow has been extremely impressive since March of last year. And so has Bitcoin. Extremely impressive, right? So we're looking at the correlative event here in 2018 to 19. This curvature formation in Bitcoin, curvature formation. Go to the support line here. Now you had some more volatility up in the Dow. Very interesting, huh? You had some more volatility wherein Bitcoin was non-expressive during that time. Note that. Note to self or VIP. Huh? Okay, the curvature formation. The Dow was a bit more correlative. All right. In terms of the drop down, okay, correlation. Okay. Then we have this move to the upside. A correlation there, but we have a big pour out. It's just wild, huh? Right when it looks like a threshold was reached. I don't know. An interesting move by the Dow, etc. That's a heavy move for Bitcoin vis-a-vis the Dow. I think we know that. Huh? Look at that. The blue line is Bitcoin. You guys know that, right? Let's see. Reset that music. So this breach through. It'd be nice to see a little bit stronger of a correlation with. Wow, it's close, guys. That's close. Look at this. This is close, huh? Good heavens, this is close. Look at this. Look at this move, if you can, of the Dow. It's pressing itself up positively within this rising wedge. Look at the little, the hinge here at the top. The hinge at the top of Bitcoin. Look at that on this is on the monthly, guys. The hinge at the top of Bitcoin okay, in line with just this subtle move here in the Dow. Subtle move up, not a big differentiation, but you do achieve a negative correlation moving in opposite directions. Bitcoin slightly down, slightly, and really the Dow just barely, you know, it's definitely achieving more of I'd say a conservative slope, less of an aggressive slope. Still on the way up, but definitely negative correlated. Then we do have a correlation between the moves down, although slightly on the Dow, aggressively on behalf of Bitcoin. So we do have a correlation there. I do want to note that correlation. An interesting time period in line with this slow fall off here. Okay, just around March to, it looks like kind of that leveling off, March to May when it got frustrated along those months. So we do have a correlation to look at. We do have, independent of that, some dynamics going on in and of itself without anything else. Some of you guys are involved in stocks, etc. Some of you guys are liquidating your stocks to get into better positions. It's a very interesting time to consider that and hear that on behalf of the VIPs, that you guys are doing that right now. It's very interesting. People are pulling out of positions in stocks and getting that cash prepared for cryptocurrencies. That's not me telling them to do it or anything, or even, I'm not even talking about it. They're letting me know they're doing that. So the Dow is high, very high, almost super cycle high, almost to where we would say we're going to count this, aside from those detailed analytics that we just did there, and we can pull up those Fibonacci's in terms of the expression of the Dow. I want to bring it up because there's a big question as to the confluence, the correlations between the Dow, the overall markets, the broader indexes, and your cryptocurrency. When the hammer hits everything, the hammer hits everything. You guys know that. Absolutely. Now, I want to leave those Fibonacci's up if I can, and it may not let me. To the extent that this is considered to be a super cycle, I haven't heard it mentioned much. We don't have a full completion, or we don't have a full top line expression of the channel in which we're currently operating. I would argue we might have a dual channel and kind of a variation of a super cycle. Let's talk about a variation of a super cycle and what defines a super cycle. Okay, the super cycle is going to be defined. You guys look at AXS. AXS, Axie, crypto was a phenomenal example of a super cycle. What did it have? It had a throwover. Okay, a super cycle, guys, it's a pricing dynamic. You're going to find a channel that just doesn't want to be beat. Essentially, it's going to be indicative of a channel that doesn't want to be beat. If you look back in the strategy, the overall composition of what is the nature of a super cycle in terms of human development, it's literally from the dark ages into the manifestation of like technological and human advancement. A super cycle in terms of society, in terms of, yeah, super cycle. It can be in terms of the development of technology. When you talk about crypto is a super cycle, right? A super cycle potentially of an advancement of the technology of currency. Yeah, out of the dark ages into something really, really dynamic. We love that, huh? We love that a lot. Now, in terms of the super cycle, it's going to be defined by, I'm going to say this, by a throwover. Angel, this is for you, brother. Love you. Appreciate your support. Okay, I did some diagnostics on super cycle with Axie. We got very much into that. Your super cycle dynamic, and this is over a period of months, essentially years on the Dow. But one of the key features is a throwover. We just got through this on Axie. I'll look at it in a minute on crypto. But the Dow is arguably in a dual channel super cycle with its throwover in play right now. Okay, this point in time right up here is going to be essentially your throw over. Okay, the throw over is in addition to these channels that are just exceedingly positive in terms of price action. Okay, even with this, I'm going to bring in a dual channel, and it's a great example for us to. This is one of those songs. I like the first half of the song. The second half can just take ship and leave port. So as we look at these guys, the super cycle is going to be defined by an upward sloping channel to a magnitude that is excessively profitable and indicative of a lot of progress. Okay, you will look at the charts. I'll throw them to you, but you're always going to have this upward sloping channel that does not want to be beat. It couldn't be beat for the life of it. There's a reason they call it a super cycle. The indication of the pricing is that Okay, and what I like about this too, you guys, everyone was like, thrown back by March 2020 in the market. Yeah, March 2020 was a heavy deal. Big shut this and shut that, and everything had, a lot of key things got formulated, in terms of protocols, etc. It was on the fly. A lot of stuff got done. Glad. I'm proud of the United States and the world. I'm proud of everybody for taking care of themselves and staying healthy. Thoughts and prayers with all of you. As we look at the expression of this, we can count it both on a Fibonacci or otherwise. This upward channel, this upward sloping channel, in March 2020, what did this hit? It hit that channel line. Boom. Nice. Nice. Aside from that being the 200-week, was it 200-week heat map and a Fibonacci? Triple indicated point of entry, right? Interesting, that 200-week heat map, which on Bitcoin has hit 2018 and 19 and 2020. It hit the 200-week heat map. I'm going to call it a heat map. 200-week exponential moving average on both during March 2020. It hit the 200 weekly EMA on. You guys paying attention to this? Okay. You hit your 200-week EMA on the Dow and on Bitcoin in the same week, in the same month, in the same day. Boom, boom. So think about the institutional level of support. Think about what the guys in Wall Street are telling you, or what you can learn from them. That's pretty important, right? And you can see through the entirety of this. You want to talk about a 200-week heat map? Is it respected as a 200-week exponential moving average? It appears to crawl right along the thing, doesn't it? Look at this. The 200 weekly. Boom. Look at it crawl up that 200 weekly. Look at that. Nice, huh? Look at this. Run into a little trouble, a little deviation. Look at it. Ba-boom. Look at it come back down and hit. Look at the deviation from it. Wow, in 2009, 2008. I remember that. I called that crash by 4 days. The ink was dry on the paper and bam. Like, well, there we go. We did it. Yep, truth. In terms of the 200 week here, 200 weekly EMA, look at it even, you want to confirm, back into the 200 week EMA. This is a hugely important level. Andrew, Angel, all you guys, I'm so glad that we're able to discuss this. So this channel line, super cycle, you guys looked it up now, huh? Some of you did look it up. This channel line formation, yep. You're like, yep. And the throw over, yep. What happens when the throw over? What did we just see happen with Axie? I'm just using it as an example. When I brought up Axie, it was in Axie Crypto. It was in, and this we'll get into Bitcoin, whether or not it's been in a super cycle or not. When I brought up Axie, I brought it up in the context of a super cycle. You guys know that? When I first introduced it to the group, a lot of the coins that I'll introduce along with the kind of the learning potentials, I'm bringing it up for the reason that we can learn from the price action. Yes, we can trade it. You guys made a lot of money on Axie. It was nice. It was big money maker. Excuse me. This upward sloping channel right here. Okay, look at super cycle. Boom. Now we have a dual channel here. Interesting. The throw over turned into another channel. Could we form? Wouldn't that be great? Could we form from another potential throw over here? Because you have to say, well, wouldn't you argue then that this was a throw over? Did it have the amplitude? It's tough. It's tough. I think you could have called it a throw over. A lot of people could have misplayed this. There's been a lot of heat in the market. You guys know that? A lot of cash going into the market. Here's some money. Throw it in the market. Okay. Right? It's been extraordinary times. This is almost a super cycle, right? Actually, no, that actually more recently. We have to say, no. Correct me. When did we get in that mode? Hold on. What are we on? Monthly? Hold on. When did it get into this? What happened in 2017? Andrew, we need you. That's nice. Now, if anything happens, Andrew, we need you. Andrew, lead support analyst. Andrew, we need to define the moment in time in 2017. If you know what did occur, what was this cross through, this crossover? Do you know the answer to that question in 2017? 2017. Okay, we're talking about just the differentiation in price. What was this breakthrough in around July 2017? The march up began in around June 2016. I'd just like to kind of know. It's interesting for me to know because I had made an equivalent of that with, and it may be this second breakthrough here in terms of stimulant money, etc., going into the market. And I'll call that out quickly if I do err my shades on and it's sometimes difficult to see the screen. That's no excuse at all. What do we have? You see me squinting down just to look. What do we have? 2000 and March. Yeah, okay. We broke through that. You guys think it was the stimulus money? I don't know. It's interesting. I don't know. Before I mention more dates or things that could have happened or not, I'm going to do it not on the fly. I want to talk to you about the nature, back out for Angel, the nature of super cycle and all of you. Definitely. This throw over, unless it can formulate a new channel. So we were already in a super cycle mode before 2020. It kind of seemed like that, huh? Oh, ooh. What was going on during here? What was this? 2018 and 19? Business was roaring. That was it. Business was roaring, wasn't it? It was, huh? I remember that those months in the stock market, I believe a commander-in-chief that was talking about those months in the stock market and all this drive up being some of the most prosperous times the United States had ever experienced in the stock market. Now I remember. Interesting. Very nice. Then we got into stimulus. Interesting. Recovery and stimulus. Nice. Wow. Somebody was doing something right during here, huh? Very nice. I mean, complete surprise to me. I have no idea. That's very interesting. Someone who really doing a great job during here. Probably a lot of people doing a great job. You guys too. So as we look at this carved down, I'd like to know that in 2017. What happened in 2017, 18, 19, 20? I don't know what happened in 2017. You guys have any idea? Andrew, you know? Micro trading these, OPS, VeChain, XLM, cool. Let's see, if you listen to Wall Street analysts considering the fact that bull run could be coming to a close, you may want to know a little more about super cycles. There you go. Now, Andrew, you'll have to dial me into this one. I don't know what happened in 2000. What is this, 2017? I don't know what happened then. What do you think happened? I don't know. I have no idea, huh? I have to find my notes on that one. 2017, 18, 19, and 20. I'm gonna have to think about that one. Oh, guys, I forgot to remind you of something. I really forgot to remind you of something. What is this? If you haven't followed us on Twitter, go ahead and follow us on Twitter. You'll find the Crypto Kingdom. It's under The Kingdom. Real easy, The Kingdom. And you guys make sure you listen to this. Not tongue-in-cheek, but listen to this. You will find on the Twitter, you will find former financial analyst and former U.S. presidential advisor. Let's see. So again, Andrew, if you can let me know, I think I messed this up a lot. If you can let me know what happened in 2017, 18, and 19, I don't know. I don't know. If you can help me with that. Andrew is our lead support analyst at the Crypto Kingdom. Very nice, huh? Very, very nice. So anyway, if you guys would like to follow us, former financial analyst and former U.S. presidential advisor. So we'll get through what caused this elevation of even the super cycle. Unbelievable, huh? Historic times in the market everywhere. Historic. You don't see super cycles like that, do you? Not that maintain and want to keep going up. Huge, huh? Yep. I think it was I don't know. Maybe it had to do with an office or something. I'm not sure. Someone got into something. Anyway, I think the U.S. economy did extremely well. A lot of business being pushed at the world, huh? From the U.S. Huge, huh? The United States did really well. It's still doing well. A lot of influx, a lot of a throw over, guys. Look at the throw over. You guys got that? I don't know. Got to figure out what happened then. Okay, let's get back to the monthly. Let's get back to the concrete because I've been having too much fun. Angel just decided to let us have fun. We don't need to keep it all technical. It gets too technical. Everything gets too technical. So sometimes we want to just relax a little bit. I was a presidential advisor then. You know that, right? I was a presidential advisor. Those were some of the most prosperous years of the United States of America, right? That's what happened in 2017. Oh, I get it. You got it? Yeah. Have a smoke. Have a stogie. Let's see what Andrew says. 2017, new growth. My man, what's up? Good, brother. 2017, new growth stocks were coming into the scene. Think Square, NVIDIA. You got that right. Tesla, absolutely, huh? A lot of American ingenuity, huh? A lot of guys just giving the reins to just go after it, huh? That's what I like about crypto. I feel like we have the range just to go after things, huh? Mm-hmm. Interesting times, huh? Interesting times. A lot of opportunity to cooperate with people. That's what I love about all my experiences. I love learning from other people. Even when people don't want to learn from me or cooperate with me, I love learning from people. All the time. I just do. Unless they want to interfere with VIP, then no, that's not on the map. That's not going to work. I don't like that. I don't like that at all. So, okay, we saw the top line dynamic of the Dow Jones. We saw that we're in a bearish formation right now. We've gone through a dual pattern. Just get back serious to business. I'll flake around this and that about me. Presidential advisor, don't worry about it. Now, in terms of the top line formation, that rising wedge after rising wedge, last time we broke out up and above, that's a different formation than I guess it's part of that formation with the super cycle. Parallel channels, just upward sloping parallel channel, boom, that's your throw over. Throw over is bam, when you're going up through something that's already a pre-designed channel because it's in violation of Elliott waves and everything else that's supposed to curve over and at least provide a retracement and a move up. Now you're in a solid channel, okay, that's just immobile. It won't move. It's so bullish. It's continuing to go up. Buyers just hammering in at that level of support, and bam, you're up and through it. 2017, 18, 19, we established another super cycle channel on top of that. Hugely important. Hugely. On top of that, boom, we've gone up through that. It's like a dual super cycle indicator. Very, very interesting. In terms of development, it's very interesting. Andrew's talking about electrical cars. He's talking about NVIDIA, graphics processors. There's a lot going on. I talk about the dark ages, this and that, in terms of the psychological understanding, the development of from the dark ages. That's if you read the different books, etc. On Elliott waves, etc., on the progression of the markets, they'll discuss the cultural, the development of mankind, etc. The sophistication, the levels of sophistication of mankind in the context of a super cycle. Technology, yeah, absolutely. Just everything from a social paradigm to the actual, the formation of basic, again, like housing and urban development. I mean, just this, like the wheel, super cycle, industrial development, super cycle, right? Dark ages on into like industrial revolution, these types of things, like super cycle, that's on the macro versus kind of on the micro. We can go on the micro back into. Let's just look at this. Why we covered this. Let's look at this. Where is AXS? Here we go. This was an interesting one, wasn't it? It was one that didn't want to quit, huh? Just didn't want to quit. Everybody's like, didn't want to quit. All right, let's look at this. On the tail end of, and this was, if you guys watch this, it's indicated differently on different time frames. This channel movement up, and I brought up super cycle when I brought up Axie to you. I brought up Axie. I remember where I was in the parking lot, and I brought up a super cycle. When we were in here, guys, we were down in here, but it just had the momentum and the push, everything. I was like, I'm going to bring up super cycle. Yes, we traded up through. You guys made a lot of money on Axie, right? Now, what did it do? It broke through the channel in line with the super cycle, and it achieved a throw over. Boom. Right? Boom. Throw over. I copied and I pasted the actual elements from the text to show you guys that was the throw over. Okay, from this line of resistance along the top, it broke through that. Picture perfect. This one is a picture perfect super cycle. Okay, on the Dow, we have established another channel. Now we've broken through that. Exciting times, huh? I like that rising wedge is an important feature of that chart, guys. It's an important feature of that chart. I just believe that. I really believe that with everything in me that says, hey, we love the markets. I really believe that rising wedge is an important feature of the market. Okay, so I hope you guys concur with that. I think you do. Yeah, I think you do. So that's Axie. That is a typical super cycle. right? You see this channel formation. Now you're understanding the Dow, that throw over, the throw up, let's see. Let me see what we've got in terms of this. The throw over is what they call it, a throw over, right? Yeah. So that throw over is the key feature. Any super cycle, where's the throw over? They're talking about a throw over, right? Or they're talking about the designation of a channel which can't be beat. You get it? But the entirety of a super cycle includes the fact, this is why it was misplaced in Bitcoin, guys, because in this channel formation, it includes the notion that it's going to have a throw over event and crash and go back down, guys. That's the idea of a super cycle. It's a lot of generative growth, and then it's a throw over and somewhat of a capitulation. So when people were discussing that on the entirety with Bitcoin, just understand, yes, it's part of that overall dynamic, culturally evolutionary, in an evolutionary context, and financially, in a lot of ways, guys. But it would have included, if we look back at BTC, if we look back at Bitcoin, it's going to have necessarily included the idea of a super cycle, was going to include this, and this was what was exciting, but it didn't necessarily comport, particularly when they were talking about it. Now you guys know this. Around the top, people were discussing the super cycle around the top, right? And that was over, right? I'm going to say at some point it was just over. Why? Because what we're talking about, we would have been talking about on Bitcoin, it's good to go over. I don't think we've gone over just like this. We would have been talking about a channel move to the upside just like this, and you'll see it tried to hold. It tried to hold, right? And there's some variables we can throw into this. We can get down to the micro. I'll just get down into essentially, we won't get real nitpicky with it right now. This is when me and Bitcoin had a big departing. Okay, we had a big heart-to-heart talk. I told it I loved it, but I got to tell you, it ain't no super cycle. Okay, when that channel was broken there, when that channel was broken right here, that was the key focal. Okay, that was the key focal. That proved it wasn't going to be an extended super cycle. Okay, that super cycle would have included the completion of this channel along the way up for a while up, guys. Could have been for a long time up, right? Some sort of just progressionary, push from the dark ages to the industrial revolution kind of push, right? We didn't get that. It would have included at some point after however long it wanted to manifest this channel or maintain this channel, a throw over. Up and above. Super cycles do. They include a throw over. That throw over has manifested into another portion of a super cycle, a dynamic portion of the Dow right now. Okay, we have a double stacked super cycle, and we have now a throw over the top of a double, essentially a double indicated, somewhat abbreviated super cycle. It's not the dark ages to the industrial revolution style, but it's evolutionary. It's a dynamic that we can appreciate. Yeah, it's kind of cool, huh? I think for people that can understand and appreciate it, it's pretty cool. You understand why Bitcoin wasn't. Yeah, you see that? So when people talk about a super cycle, now you know what it is. It's a channel that just cannot be. You can't mess with it. It's just you wouldn't be able to mess with the super cycle channel. And your bet on the super cycle is it's going to throw over the top. At some point, that's the definition. As you look back at the materials I gave you guys, that's the definition of the super cycle. It's gonna rail through to the top. Okay, it's gonna have that throw over event. Interesting, huh? I think it's pretty interesting, huh? I think it's pretty cool. I haven't done this in a while, huh? We're gonna get back serious. What do I got? All right, guys. High stakes. Time for high stakes. It's been a while, huh? Let's get back serious about Bitcoin. You guys want to level up into it. We had some fun talking about Axie, this and that. Angel powering through, doing some great stuff. NFTs, untouched market, gaming. Love it. I'm going to throw some Ferraris in the room for Angel. Waiting for that Lambo. I told him only to buy a Lambo if someone has thrown the keys away to it. That's his little brother talking. I only want you to get one if someone threw the keys away. I want you to get the best deal on that Lambo anyone's ever gotten. That's a little brother for you, huh? That's cool. They better have thrown those keys away. I want my brother to get the best deal in the world on a Lambo. Aventador. That's cool, huh? So as we look at this, let's get back into the nano. Let's get back into this. Let's get back into some heavy discussions. I haven't gone high stakes in a while because we're essentially there right now with the market. We're enjoying the retracement. Not everyone is. It's nice that we can. That is nice, huh? You guys are the right group. Let's see. I got a new butane fuel. Let's see what we got. You guys let me know what you want to discuss. Angel's bringing up NFTs. Some NFT have done well. Other ones have suffered a little bit. We're enjoying this rise. Which chart do you guys want to go through? Do you know? Okay, we have different options. Let's go through. We can discuss the Elliott waves. We can discuss the expanding wedge. We can discuss the regression or a channel trade down through. Therein, we can discuss all of the levels. I think you guys do already have, I think, all the levels for the lower level of the Fibs, the entry points. You guys have that, right? You have that. I was the one who said let's go high stakes, so I might as well just call this. Let's get into, okay, let's go high stakes. We can do that in 2 seconds with some dramatic music. Let's remind ourselves what started off the stream. Angel, did you catch the start of the stream? We started off with this. We started off with this in the context of on the candles and the wicks, a descending triangle. Okay, the top line of support, top line of resistance. You know, I'm starting to get tired when I start doing that. Top line of resistance. Also, you've been trading too many options, boy. Typically, whenever you mix up the support and the resistance, it's because you've been trading options. It's the biggest signal that someone's been trading options, because your resistance is now a support. So anyone who mixes that up, they've been trading options. Sorry, just happens. So as we look at this, let's discuss this high stakes style. Okay, now high stakes. We're talking about a mammoth, monstrous descending triangle. Anywhere you find a descending triangle on the map, anywhere, it's going to be very bearish. Okay, extremely bearish, okay. They're difficult to beat. They're not impossible. It's very difficult to beat. Now this is a representation. This white line descending triangle is a representation of the entirety of the candle bodies and the wicks. If we adjust the gradient just a touch, if we adjust this gradient, you will be able to see a little bit more. Let me move it up into the bright, into the top. You'll be able to see these candle wicks along the bottom. You'll be able to see this manifestation of this descending triangle. Do you see that? You'll be able to see that formulates kind of a baseline support, right? And we'll see this descending line of resistance here very clearly. This is the big mamma jamma. This is the high stakes moment, the high stake. This is it. If you want to do high stakes, this is it. People who are plugged in from this to the 78.6 or even below, guys, even below, we talked to the 200 week heat map, etc. This is the bad boy, right? This is the high stakes kind of big time heavy hitting game player. Like, you know, this is it, right? So yeah, Angel and Andrew, I know you guys are fully prepared for that, without a doubt. Carlos, I had a good talk with Carlos today. Carlos, I enjoyed hearing your technical acumen, etc. Since then, PE ratios have skyrocketed. Crowded, aka crowded traders. And you got that right on PE ratios. I just picked that up. There are no PE ratios within a dignified sense of the market anymore. Barely, huh? Barely. So this is the high stakes moment here in terms of if this were to express itself negatively, this triangulation. And I will clean this up for everybody. Let's do this like this again, just so everybody, I want you to be able to see. And I changed this up because I know that Angel uses some formations that look kind of like this. Let me go to a darker line. Let's go to a blue line. There we go. There we go. All right, all right. Angel, you show me your screen sometime. You guys, to change the background color of your screen, you're always going to be able to right-click and go to Settings. right click on anywhere on your screen in trading view, go to settings, click on settings. You'll see at the very top, you'll see a background gradient. Okay, you can change it to solid, you can change it to gradient. Okay, you can do anything you want to with the color or the schematics of your pricing chart. Okay, so right click and go to settings. You'll be able to change the background color of your charts. You can make it a gradient, kind of a fill color if you want to. It's a nuance. If you guys want to work on that, you can take it white to black, or you can change it to any color you want to, guys. You can make this customized however you choose to make it look. It's 100% up to you. Okay, this is the standard featured kind of price chart that you get. Now, in the context, we have to remember what we have on the screen, but I just wanted to definitely, let's see, that's fine for now. Let me do it blue because the price chart's blue. We're getting through this notion. The high stakes is the understanding that we have an arguable descending triangle right now. Arguable descending triangle. And let me get this in the works here, like that. That's good. The descending triangle is going to have a descending line of resistance. It's going to have a flat line of support. We can make that out relatively clearly with the wicks and the sticks, guys, on the bulk of the candle work. And look what that little candle's trying to do. All right. You guys see that on the daily? That's problematic. I believe it has closed below that line. It has. You still have a few catches. Uh-oh. Uh-oh. Depending on where you want to draw your line of support, you do have a dual indication here. There's a dual indication on this descending triangle. On the line of support, you have a hit here. You also have a hit here. It's been recognized 2 times. 1, 2, bam, bam. You also, guys, could have potentially, if you wanted to, you know, that's why I started with we want a primary, secondary, and tertiary, you know, strategy here. Because you also could have said, well, no, you know, we have multiple levels along the line of resistance along the top that could have been recognized. Essentially, we just have it's a real complicated. It's not unlike the Dow. You guys, as you look at the Dow, we have that dual channel, the super cycle kind of channel, then the channel above. It's not really unlike that in terms of like this having pushed into a new channel, particularly around this area. Okay, so we have this kind of this double indication here on Bitcoin that we're looking at. We appreciate. It makes it a little bit difficult because I'll say up till now, because we could have essentially broken down from some you know, what somewhat of it wouldn't be, I think, commonly understood, recognized. It's a little bit vague, right? There's a bit of ambiguity. But as we look at the entirety of the whole of this on the wicks, we have a line of support. Okay, this line of support along the bottom. Essentially, the pricing is going to stop there and trajectory to the upside. Stop there, trajectory to the upside. Now, we have one outlying position right here in line with, what is this? Circa 29,600. That's interesting. We kind of floated along that for a while, didn't we? So we've closed below that on the daily. We have closed outside of this zone, a dual indicated zone. We can at least say that for now. Indicated and around, what was that, March 20th? March 20th, and also on June 21st. We've been in this this designation for a while. Closing the candles outside of this area is important. On the daily, guys, it has some implications. You understand that? On the daily, it has some implications. Okay. The weekly, we can go to the weekly. The daily is going to show us essentially, as we got into a high stakes discussion, right? It's the magnitude of this move is significant. Were it to comport fully technically, okay, circa the 786. We did some diagnostics earlier to where it would be more fully in line or not with, depending upon some assumptions. Again, triple strategy. You know, we hear more than one answer to the solution a lot. The solution that you guys have, which works all the time, is heavy cash reserves. We don't have a situation if we talk about any, I don't want to say technical ambiguity, but cross indications. We don't have too much of a circumstance in the previous retracements of Bitcoin wherein people were just completely left out. Okay, and this should put us at great ease, guys. Okay, this should put us at ease because we don't have, like in 2018. Look at this, Angel. I think you'll like this a lot. We don't have a circumstance. Now we do here. We have a, guys, it's very similar. As we're talking about this descending triangle. Look at this. Look at this, guys. You paying attention? Guys that are left, I think this will be good. Look at the descending triangle in 2017-18 that did pour down. It wasn't as heavy, but when it poured down, it did pour down to that 200 heat map. I don't think that's indicated now, but it did operate a little bit, and we'll want to measure in line with maybe this 2018. Okay. Let me see what I've got in terms of music. We're back to doing this. Back in the hunt, huh? Little rocket launch for Angel. Let's see if we have fun music, reggae music. I have to have some music right now. We'll put Angel's song on just for a minute. I'll put it low in the background so I can hear it. I enjoy that song. Okay. So we had kind of a descending triangle again on the, it's interesting, huh? The movement here, because you could have defined it like that back in 2018. We might be making progress. If we think we're misstepping, we might be making progress with a counter kind of induction that we made, or otherwise. We do have the same type of formation in 2018. Now, what did it do? Well, it didn't really go. It didn't level down that heavily, right? It didn't achieve the full expression of that. I think that's interesting to look at, if nothing more. It's because that would have been. It didn't have the room for that. It just didn't. So we did have a descending triangle there as well, which is only defined, and I'll just bring this up, only defined on the wicks, right? So, and it really didn't have the room, but look at that volatility. That was huge volatility. That was huge volatility, right? That was a move down of, 70%. You think this year's bad? That was a move down of 70%. I'm glad we did that for contextual purposes. In 2017 to 18, Angel was around. Some of you guys were around in crypto. It moved down 70%. Bam. That's impressive, huh? Nice moves. Nice moves. We love that volatility. Now here we have again indicated only on the candle sticks and wicks, and now previously we did not achieve the entirety of that descending triangle. So I'll bring that up in the mix as we want to gauge this, high stakes, etc. How much credit leeway do we really want to give this? Well, as we're breaking through, maybe we don't prepare for Hiroshima immediately, right? Maybe we're ready for, some other discussions and some trades along the way. What do you guys think? We're ready for some trades along the way? Not fully exposed. I know you guys will never be fully exposed, but maybe that's what we're going to look at. If 2017-18 plays true, but high stakes, how heavily would you want to play? I don't think you guys are ever going to stray from your common understanding, heavy reserve cash. But it's interesting to look at that this has happened twice now, essentially, with this because some people would argue that's not even indicated technically. Look at that. It's pretty clear cut. 2017 to 18. Copy that, huh? I don't have to copy everything, but copy that. All right. This to the current situation, it's close, guys. It's close, especially if we respect the interior of this dynamic here, and we're using this outer line as a differentiated, I'd say a differentiated kind of just an attempt to break through that descending triangle. We're real on par with what it looked like in, oddly, isn't it? It's almost odd, guys. It's impressionable, to say the least. 2018, right? Bam, retracement, Bitcoin. Interesting, huh? You saw that descending triangle. 2021. You see the descending triangle. It's interesting, huh? It's chosen that at least twice to operate in. So that's interesting. That's not bad. Let's see what we got. So as we look at this, guys, you have your pricing targets. 24,777 is your 61.8. I'll just repeat it again for you guys, right? 22,000 is the 65th percentile is going to be just a touch. I can't stand this music anymore. As we look at this, the 65th percentile is going to be just a touch under that. Let me go ahead and switch back to this here with this here, and that should give us the 22,702 is that 65th percent retracement as we go down into, the 78.6, 13,880, and the 86th percentile is 9,080. Mind you, in 2000, and let's pay attention real quickly. Yes, the heat map, that 200 weekly, has been respected. I just think it's interesting that in 2018 to 19, it achieved a price of 3,000 and 3,000 guys, about 3,000 and 3,178. Then it achieved in 2020, guys, it achieved down to 3,800. So 3,100, 3,700 ballpark in 2018, and then 2020, 3,100, 3,800. It's been operating in a different dynamic price-wise. I'll give that to you, but we would be remiss if we did not discuss the fact that it has recapitulated to 3,000 multiple times. Now, the fact that this was an individualized, that this was, let's say arguably this was just one pricing cycle, I think that's a difficult argument to make. I believe it's a difficult argument to make because we do have a repetitive wave formation here. Strong wave formation after heavy retracement. So in terms of that, I would just state that it's indicative of a secondary pricing cycle for whatever that is worth, with a real strong move to try and move to the upside. It had to recapitulate. It has this habit of recapitulating, guys, really strongly recapitulating. As we're into this one, if we can get a strong recapitulation in line with those previous two pricing cycles, I'm just going to say this is going to be nice. We're prepared for it like nobody else. You guys are doing a great job. Let me know, Angel, what you would like to discuss. You brought up NFTs. Is there something specific? Let me look back and see what exactly you had stated. Bitcoin has retraced, just as London explains. Believe me, it has retraced, as we explained. It's been nice. Julian in the conference call this morning reminded me of the fact that I began discussing a possibility of a 13,000 up and around the time of its height. Very interesting, huh? Very, very interesting. And no one was discussing anything about even like a 30,000 or anything. A very unpopular opinion. I would just like to see those prices if we can achieve them. They could be hugely profitable. You guys know that. So let's take a look at this. What do we have? I think what I'd like to do, if you guys will permit, I would like to go and set up some different analytics so I can plug back into that. Also, I have not eaten a whole lot today. I'm going to go take care of that just in a minute. And I just want to shout out to Angel and to our new VIP cruise. Very nicely done. And we'll try and keep the energy going. Well, you guys know I had a very early morning. And you guys had a busy day as well. Angel, you did too. So let's go eat well, sleep well, focus on those relationships outside of the market that we knew. Let's go invest in those relationships. Let's remind ourselves that we have broken down out of a potentially, I'd say, a pattern which has the high stakes, level to the downside. I'm just ready for the 786. If it begins to, and I did bring this up, it has not expressed this. Let me complete this thought fully. I don't want to be sporadic. Though the market is kind of grabbing my attention with some different things on the right, some different movers. But it hasn't really, as we look at this, it really hasn't, in the entirety of it, we shouldn't be too awful concerned, I don't believe, based upon the dynamics, the historical dynamics, we shouldn't be too awful concerned about missing the boat on the upside, guys, because it's clearly established itself when it has needed to. It has gotten into, let me just make sure that this is completely transparent here, because each time it has gotten into this mode where it's kind of done with its retracement, and it's giving people an opportunity, yes, to get in at these lower levels, but it's staggered in here, and it's allowing people to play the upside. It just is, with some pattern formations, etc. Right? And we can bring up what those pattern formations are. We have, originally down here at the bottom of this one, it was very kind, I think, to people, and that it in 2018 it established some degree of an ascending triangle, which is known to be a bottom, right? Right. So that gave people time to get in. We could get into this formation as well. It probably has a little bit of dual indication as well, but we would probably say it closely resembled an ascending triangle as well here. Kind of imperfectly formed, though we've traded quite a few of these, and it's worked out relatively well. Just this nice, slow, easy build. We're on the daily. If we were to go into the hourly, I'm sure there's plenty of formations aside from that. We would want more of a full expression on the ascending triangle. We can get into let's get into the depths real quickly, just to kind of see what we, if it will allow me to. Let's see where we're at. Okay, we're all the way over here. It's going to be difficult for us to trace back through that. Let me get on the daily, see if we can pull that back out on the daily. Excuse that. We may just do this on the daily. I don't want to necessarily stick with the ascending triangle if there's more in here. Is there more in terms of the building of this? I know that there is on the lower time frames. I don't necessarily want to stick at this. What I'll do is I'll tell you I will definitely I will formulate exactly how this was picked up, and I want to do it now. I just do. Because it's an important point, and I don't want it missed by us in the entirety of this. If you guys want to look at the same time frame, that would be great, just for you to understand what we're looking at right now. The ability to pick up, right? We want to cover that ability to pick up at the low and be able to ride these, to appreciate what we're into, right? Okay. And this one was tough. It looks like you had somewhat of a nice pennant formation in here that frustrated to the downside again, right? And it's just the best formation we're going to find in the bottom of anything is going to be the ascending triangle. It's going to be this ascending line of support and a flat line of resistance. To the extent that we find them in that condition and they perfectly conform, that's phenomenal. That's what we want to find. Let me scroll back over here. I just want to make sure that we do the diagnostics on when would be the pickup points, right? Yeah, exactly. When would we know to buy in, essentially? This is the 2019. Let's go back over into this area, and I think we'll find this ascending triangle was pretty well defined. This was a nice ascending triangle that gave people a lot of time to get involved in this market, this through 2018, 19, etc. So you had time to get involved in that one. That was a nice, pricing cycle to be a part of. Then the next one, I just want to get through the indicators just to assure people that we should have time to get involved in this dang hourly. You guys know it's just too much to scroll through. We need an entire wall of just Bitcoin, right? We could handle that. So in terms of this, the structuring, the patterning, if we can't define it as an ascending triangle, how would we be assured that we would be involved at the right time? Let's go to why don't we go to the daily? We're going to fall back on what Andrew brought up earlier. Copy that. Thank you, Andrew. Thank you very much. Hats off to Andrew. Why? Because what did he bring up? He's definitely eyeing the RSI on the daily, right? That would be our pickup point. We're also at that level, not as deeply, but we're at that level, almost at that level now. We are almost sub 30 again. We've already hit sub 30. Back in 2018, we hit the level of, guys, we hit 9. We hit 9 on the RSI, guys. That's impressive, guys. We were below 10 on the RSI. Below 10 on the RSI. Hello. At the bottom. Hello. We're eyeing right now below 20, etc. Wow, huh? In 2000, that's in 2018. A 10 on the RSI on the daily. Wow. In 2020, we hit a figure of about 15 on the RSI. We'll look back and schedule this out. About 15. So 10, 15. Thus far this year, we've hit 23. Sub 20. Textbook. Sub 20. Below 20 in a bear cycle amidst a retracement is a key figure. Whether or not it's 10 or 15, sub 20 is textbook, what you'll find in here. So you don't have to read it. Sub 20. Under 20. So aside from the chart formations, beginning to look at something a little heavier, potentially sub 20. If we can get it. If we can find it. All right? RSI sub 20. Gotcha? Gotcha. Okay, that's a key feature in line with the pattern designations as well, in line with what we're going to pick up on some of the bullish. What's going to be bullish is the relative strength index. It's completely oversold at that point, right? They've driven the price down for guys like us to pick up to pick it up. So we're going to be looking for this, hopefully, to get below. I mean, the level of like 21. It's not even really technically met. It's met the definition, guys. From a technical analysis standpoint, it it could have a variation and say, well, this time it's just 22. But technically, we would want to, and you guys research that in your book. Look up RSI, look up the relative strength index chapter, read through the facts, and that's the New York Institute of Finance talking at you, saying in a bear market, in the retracement, etc., we're going to be expecting. I'm going to tell you guys, you talk about a bear market, people say we're not in a bear market. What are they talking about that we're not in a bear market? What do they expect for a bear market? What would a bear market be? You've already recapitulated 1-2 times in the last like 5 years or so, 78% multiple times. That's bull bear, right? We're in bull, we're in bear. I mean, that's the cycle of the price. That's the cycle of the market, right? I don't understand that when they say we're not in a bearish market. Lost 50% of the value of $1 trillion+ market cap financial concern. That's bear, right? So below, and you guys look that up in the book if you'd like to. Below the 20 on the RSI is going to be our wham bam. Okay, we got it squared away. Maybe we're dug into this a little bit deeper, scaling in as it were potentially to go down to 15 or down to 10, based upon the two preceding pricing cycles. That's big money talk. Okay, that's your decision. All right, we're gonna talk about what that that's these are strategies we talk about. You guys put them into play. I feed off of you, maybe more than you feed off of me. Y'all's levels of success is phenomenal. Your level of market instinct, I couldn't replicate it with give me time to replicate it, and it's gonna. You guys, come on. You guys are excellent at what you do. You just are. So these are important that we do these diagnostics, looking back at the previous pricing cycle, saying yes, it was below 20 down to 10 in 2018-19, 2018 down to sub 10, 2019 to 20, it was sub in around 15. So 10 and 15, 18 and 20. In 2018 and 20, we were at 10 in the RSI on the daily. In 2020, we were at 15 on the RSI on the daily. Right now, we just got to 22. That's why I keep saying we may have some more room to go. You guys know that. The acquisition of the price at a much lower level, that volume we keep talking about, maximizing that volume, the efficiency, achieving a real efficiency in terms of the cost basis. Yeah, right? We want more volume. We want that volume. Yeah, you got it right, huh? So if and when this does decide to dip, right? Now on the candlesticks, you're probably making money on these. Yeah, you're definitely making money on these moves when it goes down even to 22, right? You are. You're making cash on those. In terms of a real solid acquisition level, I'm looking for something that comports with technical analysis. And believe it or not, just pay attention to this real quickly, guys. I want something that's highly probable. I'm going to do my own personal stuff in line with the highest degree of probabilities, in line with literally institutional framework and what's written, right? What the game plan is. Now, people who want to play a little bit faster and looser, well, it's at 20. It's at 22. No, it's at RSI's at 22 on the daily. Nah, me, I want it below 20. That's what the book says, guys. Below 20. Copy that. That's what the book says, okay? That's what the Wall Street guys are going off of, etc. The Wall Street guys I know, okay? That's just it. That's not financial advice. That's just the truth. Now, in terms of that, it's played out in 2018. It's played out in 2020. 2018, it got down to 10 in the RSI on the daily. 2020, it got down to 15 on the RSI. So the book has been right twice in the preceding two price cycles. Okay. So now that's what I'm looking at, me personally, as a conformance with that to get aggressive on it. I'm talking about aggressive, right? That's just me. You guys do what you want to do. But I'm going to stick with the book because the book's been right twice, preceding two pricing cycles. It says underneath 20. It says under 20, right? So we'll see how those probabilities continue to play out. Would I sit out something on a big scale if it didn't conform technically like that? I'd like to think I would. If it didn't conform technically to the nuance or let's say the specificity of market expectations as designed by the market leaders, I would like to think I'd have the discipline to sit it out unless we really started getting into, and I'd say this, we're able to re-engage upon the demonstration of some bullish activity. That's the saving grace, right? That's the saving grace of the market. Once we get into it, it's a bull flag. Hey, we're on it. We're excited about it. Still always with big cash reserves, right? Because you never know what could happen, right? So that's a big point that we covered tonight in terms of, yes, super cycle. We went through some dynamics there. Bitcoin wasn't, it wasn't, right? So we didn't see that throw over. We didn't see that sustainable channel on up. Even while it was capitulating, it broke out down from that channel. People still talking about a super cycle. I guess it could have regained that, but it was over. That was over. That didn't apply. In terms of the RSI, Andrew, you're looking at that. There are some good trades to be had in around the 15. There are some great trades to be had. Not 15. I'm sorry. You were saying under 30, etc. There are phenomenal trades in the daily. Absolutely, and we'd love to trade. So it's a beautifully well put statement in terms of where do we catch ourselves on the different indicators, like the primary. I'm going to say RSI is a beautiful one to look at on the daily. Down to 10 and down to 15 in 2020. I'm sorry, 2018 and 2020 respectively. 10 and 15 in 2018 and 20 respectively. So what a story, huh? And beautiful conformance with technical analysis as we understand it, huh? Really, really beautiful conformance with the fundamentals of technical analysis. Love that. Definitely love that. So that's where we're at. That's what we're looking at. We are looking at the RSI trying to act like it wants to get down into the 30 zone, right? And we'll see what it wants to do. We have a few levels of support. We have a channel line, a diagonal channel line that has not wanted to give up as you guys look at your holdings, etc. As you look at kind of your entries, this channel line, the standard, we can do a standard deviation and really pull it out. I don't like the way the regression line is going to play with your entry along the line of support. Okay, I don't like, for instance, the way a regression trend is going to compensate necessarily for this here and give it an upward slant. I don't necessarily like that. So it always is going to include any outlying events, but that more or less is going to give you an indication, I'd say, of your pricing target there. I would go on the lines. I think people who trade a lot would go on the lines instead of a regression trend. But if you just want to draw that regression trend, it's underneath the trend line. It's the bottom option. You can go ahead and draw that anytime you have a real confluent channel, right? Anytime you're really confluent, let's say, for instance, within this dynamic here, it should be that's a relatively straight line kind of channel. That's well designated. So that's good that we covered that RSI down to 15 and down to 10, right? Yeah, I think that's really great. And we all want to expose you to 24/7. We appreciate so much your not being a part of anything positive in your life. We know what you did last summer too, and I got to tell you, there's losers, huh? Absolute losers. That's okay. What do we have? Soshi, nice to see you. Nice to see you, Soshi. I wonder if anyone doesn't like the fact that I brought up the presidential advisor thing. Maybe that word gets around real quickly. I just love that. Huh? They wouldn't imagine anything wanting to be canceled on purpose or, stretching their truth or anything. I can't imagine that. That'd be completely unheard of. Absolutely. Huh? Anyway. That's just no surprise. Yeah, the attorney that I am fortunate to go and potentially, I'd say, deal with on a formalized level is the former, or he current, I think he represents Mike Lindell. Mike Lindell? What happened to Mike Lindell? I don't know. What do you guys think that happened to Mike Lindell? I don't know. Huh? I think they shut his business down, didn't they? I think they did, huh? I think they didn't like the way his politics were revolving, huh? I think they stopped selling his goods and really threw a torch to him instead of a rose bouquet, huh? That happens, huh? And yet he fights. And yet he wakes up another day to fight. It's interesting. The dynamic is an interesting dynamic, isn't it? It is. And yet he fights. I love it. I'll never quit. I don't even know what that word means. They've tried to make me. They tried to make Mike Lindell too. Yep. Shout out to Skippy, attorney, I believe. We'll call him Skippy. So I know. Anyway, great crowd, phenomenal. Just overall competitiveness in the U.S. of A. We really appreciate all that. It's nice. It's just beautiful when it functions that way. As long as we don't have to turmoil over it too much. So we're going to stay positive. How do we stay positive? Super cycle. We went over super cycle. We went over, what else did we go over? And you guys know enterprise level of security in the back rooms in our Twitter, etc. We have enterprise level of security. We just do. Anyone messes around with me, target you, anything else, where do they go? IC3.gov, FBI division of that, add to the list, and we just don't put up with it. We don't have time to put up with it. We don't. That's just not part of our MO. It's just not. So in terms of the overall nature, I think we've covered super cycle. We've covered the 1, 2, 3 punch. We wanted the 1, 2, 3 punch, the primary, secondary, and tertiary, right? We did. If it's conservative, medium, and more aggressive, I think that falls right in line very well with just status quo with where you guys are. Always the ability to respond to the market. We'll always keep that in mind. The EMA, 200 weekly EMA, hugely important for also the Dow and crypto, correct? Yes. For the Dow Jones, which we went over, and crypto. The 200-week EMA, both were hit in 2020, correct? Copy that. What else we have? So 200 weekly EMA, super cycle. What else do we have? We do have some people in this chat room. I have to just tell you about them. They literally tried to extort money from me or steal from me and the participants of the channel, etc., and started taking money and donations from me. And then when I would not hire them, they began to become belligerent towards me and my family. That's nice. It's nice that those issues, I guess, don't need to formally be addressed by anybody, do they? I would think they would be. Well, I guess you make reports and people decide what they want to do with their lives. Anyone ever threatens you, your family members, your safety, etc., bring it to the attention of IC3Gov, FBI, because those individuals have to me and my family. Okay? A lot of politics is not fun, guys. Sounds fancy. Sure does. Sounds fun. A lot of difficulty, guys. A lot of difficulty is spread around through people not doing their jobs. So, anyway, let's talk about good things. We covered super cycle. We covered the 200 weekly EMA. We also covered, what did we cover? We covered the descending triangle. That's what we covered. Okay. In addition to the normal line of support here. Okay. So we have kind of we have a multiplicity of kind of immediate short-term plays here. We'd say this trend line. We'd also say I'd say that could be one. If you're looking for a primary, that'd be number one. Number two, I could say it could be the golden pocket. Absolutely. I could say number three would be maybe the downside level of the 78.6. Boom. On top of that, I would throw in some extensions below and between and do your extension work from the top to the bottom here and drag that down and see what levels you might want to hit in the extensions if you're not wanting to go into the smaller time frames. That I think would be a good 1, 2, 3. 1, the support line. 2 would be the golden pocket. 3 potentially would be the 786. Getting back on the macro overall, okay, I'd say conservative to medium to aggressive. You could be conservative in this area, medium up and around the golden pocket and or the 786. And I think the heat map is integrated with that. But if you were to go underneath that 200 weekly EMA, you could potentially slam some more cash into it because it is indicated in 2018. Remember, we went underneath the 78.6. still held on the 200 weekly EMA, but we did drop down below the 78.6. So that would be the conservative medium, conservative medium, and then heavy. Conservative meaning I would say probably the golden pocket, and then the 78.6 along with the heat map, and then anything underneath it would be more of a heavier approach. So those would be 2, 1, 2, 3 punches that I would look at. Okay, kind of the primary, secondary, tertiary. Me personally, okay, I think that makes sense, right? On the immediate concern, you have the trend line, right? We have golden pocket fall through on 786, right? I would just focus on that relatively immediately. We've been right on all the calls so far, and yeah, I just appreciate you guys being cool. You guys are awesome. Let me see what else we have. Soshit, how are you? I haven't seen you in a while. I haven't been around, but we're talking about first, primary, secondary, and tertiary, or first, second, and third degree, kind of what we talk about the levels of strategy that you might deploy. Soshit, we hope you're doing really well. We had Angel shout through with a big. We have a new VIP member too. VIP. We have VIP very well. Cruz, I think Cruz, absolutely. Cruz is new VIP, and we have Soshit's been around for a while with VIP. I'm going to go eat. I'm going to go talk to some VIPs if you guys want to talk and discuss any of the exact figures. We have all these calculated up, and yeah, I also have to say I had a big channel on Harmony One. I did, and that's the worst crowd I've ever run into, aside from the guys who decided to be VIP. I have to state that for the record. I went through so many times talking about cash reserves. None of them wanted to sell, and what happened? It went all the way down, and they are just miserable people. Just the ones who have crowded up. So we don't want them around. I have some positive Harmony One people in the group. I think Julian even traded Harmony One. And it's unfortunate when people get I don't know. It's just I don't know. Just why can't you be happy? I mean, life's too short to not be happy. We're happy all the time. So when people respect our community, when they don't, we'll definitely point that out. So I appreciate you guys respecting the community in the back rooms, etc. You guys are doing great. And you got any questions, Soshi? Since you're here, you're VIP. We talk about private chats all the time. I know you got me, brother. You're my big brother. It's just, hey, man. I tell everybody I've been through mountain peaks and valleys, and it's not the mountain view if you haven't been through the valley. You learn to fight in the trenches. That's just the way it is. You just learn to fight in the trenches, and it's that life has peaks and valleys, and we find people to stick with us, and it just is what it is. You're trying to catch up. So the beginning of this is a nice one. Yeah, we give them the 1-2 punch, and right now the 1-2 punch is on the crypto. It's on the strategy, and that's what we're focused on. So we can't be bothered with we just can't be bothered with a lot of this other stuff. Even though I try, it's okay. A lot of people don't like when you're doing well. I bring up a tongue in cheek earlier on. We can't deny that Dow Jones did. I mean, 2016, 17, 18. Guys, that was the best market, U.S. in terms of growth potential. That was unbelievable, right? That power up on top of the super cycle. We did great in business back then, and a lot of parties were involved. A lot of people, did real well. It was nice to be involved at all during that time. It's nice to be involved with you guys now as you're doing well. And thanks for the support, Angel. That means a lot. You're the man, huh? We're going to get them, huh? We're going to keep proving them wrong. We're going to keep getting them. I guarantee you, huh? Ain't nobody going to knock us out. Ain't nobody going to knock us out. They may try, and they've tried plenty of times, haven't they? You bet you they tried. The better you do, the more they try. It's like dirt on your shoes, huh? Just throw those shoes away. We're going to get a new pair of shoes, huh? Yeah, we're going to go get a new pair of shoes. We're going to figure that out. Absolutely. And it's just so funny because the people who hate and go after you, they don't even get it right. And you have to think they didn't get the market right. I know they didn't get the market right. Do you think they got anything else right? Unfortunately, they didn't. And they could go through a million different things of the things they think they got right. And this is the unfortunate part. And then why I'm thankful for VIP. We definitely need to listen to this because they didn't get anything right. They don't get anything right at all. And they're trying not to get it right, probably because they were unfortunately not right in the market. But people, I don't know what. It's funny, huh? You expect them to get anything right? They couldn't get the market right. So, no kidding, huh? Let's really listen to them now. Like, well, they couldn't even get the market right. These guys, they couldn't do it. So, in terms of that, we will. I don't know. We can look through. We're getting into the red again, slightly. Let's get into a little bit of the hourly and see what kind of hourly patterns we're kind of getting into here. Just a let's see. What are we doing on this? All right. Seems a little bit calmer on the hourly. If I maintain that same line of support, we can go through some differentials here. We draw some different lines as we get into that hourly. We bring some lines further down. Again, we're going to have a consolidated view. The more that we zoom out, right? The more that we zoom out, we'll have more of a consolidated view. This line in around 25,000 is becoming interesting for a relatively rough and tough play. Yeah, 25,000 for a tough play on the hourly chart. I think you can draw that trend line and see how that could be indicated. Anything 26.5, 20, 26, 25, yeah, could be indicated in terms of a trade. It could be interesting. Again, we're pouring right down into it. It's kind of nice. We're heading directly down into that golden pocket, which is nice, huh? Wouldn't that be nice just to slam into that and have a beautiful trade? I'm definitely going to trade. So looking forward to that and to all of us trading that. I know, Angel, you're going to trade that, huh? Absolutely, you're going to trade that. Yeah, we're all trying to be the best man we can. That's why we hang out together. I appreciate that, Angel. Very much so. It's you know, you learn when in life when you're down. Sometimes I'll tell you, you learn people. You know, you learn the grace of receiving a second chance a lot of times. And I'll tell you, when you say what you will, but when you know, say a president of the United States or someone else gives you a second chance, and you're like, really, huh? You know, that's nice. That's nice. That's okay. People can say whatever they want to about any president. There's stuff to say about every president, you know. But I'll just say for the record, when a president of the United States says, you know, and it's just no question, this, you know, this and that, it is, you know, like, well, hey, that's a lot of what we stand by. Just, you know, it's just every day's a new day. It's a beautiful thing, huh? I'm glad I get to spend it with you guys, honestly, huh? Absolutely, huh? I've been through a lot in my life. You have to understand, I've been a lot in my life where I turn around and be like, yeah, I'm just sitting at the president's house. Just no big deal. Just, you know, sure. You know, everybody's sure. Like, you know, it's a nice deal. People show character in different ways, and I've been able to experience some different character with some different people like that recently, and not extremely recently, not with this administration, but it's been it's taught me a lot about life and where people may be at and where I may be able to, I don't know, potentially even help them go, or you know, just it's been a big experience. Life has been. It'll continue to be a big experience. It's been interesting, huh? Been interesting, huh? Very very interesting. So yeah. Aside from all that, huh? Can you imagine people wouldn't like that? Yeah, I think so, and that's okay. They don't have to, as long as it brings some something interesting to the dynamic. I don't like to talk politics too much, but when people don't like it, it's just like if that's a reason for people not to, you know, it's never a reason for me not to like anybody. Huh? I've called big people on both sides of the fence. Like I'll pick up the phone and call you know some person in some strong Democrat. I will, and I'll just be like, I really liked your last commercial. I'd really like to know information about what all you've done. I really like the fact that you were just with the union on the streets marching with the union. Most you know, strong Democrat, everything else. I'll just leave a nice message, you know, and you know, I don't think they know what to do with it. They honestly don't. And I'm like, I just really thought it was a nice message. I really liked what you just went and did. I really like, you know, that's just kind of who I am. Other people, it's like you have the wrong card in your wallet, or you know, whatever it is. It's just interesting. I don't like to be political. I guess we're all going to have to get political behind the closed doors, right? We don't want to talk politics. Good way to ruin a business or a relationship. My big brother taught me is to get involved in politics and talk politics too much. That's what my big brother taught me. That's right. So we're down. We know we can go further down. You guys have the 1, 2, 3 punch, right? We have this line of support here, okay, on the line versus, and you're even going to start using this, guys. On the, if you talk about the first, second, and third degree of strategy, you're going to use first strategy, line, trend on the line. Second strategy, you would say trend on the candlesticks. Right, so you're going to have this 1, 2, 3 punch. There's always a backup is the complication. We're trying to find a clear-cut 1, 2, 3 strategy for the market right now. You just have to say, like, it's honestly, like, you're always going to have a backup. And that's probably the best thing. Always have a backup, you know, in terms of this, because you can go through a trend line on the line chart here and say, well, I'm going to enter into a trade. I want to trade some, you know, I'm going to enter into a decent trade on Bitcoin. I'm setting up around this. I've got my alert, you know, maybe say I have my alert set right here. I'm going to just siphon this off. And when we do this, I'm just going to, you know, schedule up an alert, an alarm. You see the alarm pop up right there. And when it gets into this zone, I'm going to watch it a little bit, or I'm going to set, just to be able to kind of calculate where this is going to come into contact with it. You could do this on the line. You're going to have as a backup, well, maybe because you wouldn't want to put a stop loss order in, right? You wouldn't want to put the stop loss order in if there was a strong deviation between the line chart and the candlestick wicks, right? Because then you're going to get wiped out if you have a stop loss order in play. And it was actually, it looks like on the line chart here, but it really went, so you're going to lose your position. So your backup essentially is going to be, inclusive of the dynamics of the pricing in between the line chart and the candlesticks, right? That degree of variation that exists. There's always, you're going to have a backup. So this 1, 2, 3 approach, we've hit this 1, 2, 3 multiple times tonight in terms of the designation. It may be this line of support. It may be the golden pocket, and then it may be the 786, which is fortunately confluent with this 200 weekly EMA. Okay, that's a big deal. Okay, so that's a nice 1, 2, 3 punch, and that third punch is kind of a double. It's kind of a hammer because we do have this line of support as a trade indication. We do have, it's supported multiple times. We have this golden pocket, which is a strong indication on a lot of, most charts, guys, on most things. Then we have this 200 weekly EMA, which is delivered right up in line with the 786, right? Yeah, it is. So that's really nice. Yeah, that's really nice. And yeah, that's okay. That is okay. So as we look at that 1, 2, and 3, the third is kind of a double whammy. The backup is what? Well, the backup is, for starters, the backup is the 86. The 86%, the 86% retracement, 9,080. All right, that's just the backup for the triple, the triple hit. We should have time to re-engage. The issue is going to be the further you get down in price, the more calculative it's going to pay to be. Typically, because the difference between, let's say potentially 9,000 and 13,000, or let's say 20,000 and 30,000, or the difference between an entry. You guys know this. The difference between an entry, if you had bought in it, well, I bought in at the top of this channel at 41. Now we're at, now we're at 29. That's a 30% loss, right? That's a 28% loss already. So the difference as you work your way down, it continues. This dynamic continues. Like, well, if you were to decide I'm just going to enter in at the golden pocket versus I'm going to enter in at the 786, recognize that's a 42% drop between the top, the 61.8, and the 78.6. That's a 42% drop in the value. So if you were to expose yourself fully at the 24,777, guys, you would at the 786 at the 13,880, you would have experienced a 42% drop in your holdings. So you have to have that scheduled backup. You have to, it just, because I meet people all the time who, I talked with someone today, he's like, well, I was able to get out of of my position in crypto, et cetera. I didn't lose money. He's a very good trader, very skilled trader. Very few people are in that dynamic. A lot of you have profited very much from things. So that is nice. Eat maybe some blue. I love it. That is awesome. See you soon. And it's you know what, I don't like when things happen a certain way, but I love it when you are right there by my side. So I'm glad things happen the way they happen. Isn't that cool? That is cool. If you're taking off, Angel, we'll go ahead and sign over and out. Hope that it was a good stream for people as we talk about the descending triangle here, which I don't think is making too many headlines, but I think that golden pocket and 786 are kind of indicated. So, Angel, we'll talk soon, and the rest of you guys, let's get busy in those backroom chats. Want to see you guys booking those positive trades. And yeah, it's just been a pleasure, guys. This is London with the Crypto Kingdom. You guys take care.